actually 2018 and 19, just for fun, I would always try and figure out who Satoshi Nakamoto is. And so I was doing a lot of research into that, and I found something else that I had been looking for previously, but wasn't looking for at the time. I found the only person ever in cryptocurrency that made any sense and could describe everything in a logical way that made real scientific and economic sense. Am I allowed to say who that person is?
But as you move to, say, like doing something like just storing the hash timestamp, it's timestamping the hash of a document. So like even with OneSat protocol, they use the payloads stored elsewhere. You can sort of embed it in the OneSat, but you then can spend it onto the next Satoshi as well, because it sort of transfers, and the semantic mapping is tracked in index or in the overlay to apply it onto a new Satoshi if the protocol was followed, where the first outputs one Satoshi was going to be what's carrying the new thing. So you're moving away from, and if you're using Opreturn to put the data on there, you cat pictures, you're not binding that to an economic unit either. So
yeah, you've got the commodity Bitcoin, and then you've got this other Bitcoin where you have some sort of value built on top of it. So I was thinking, so the commodity Bitcoin could be like, you can imagine it as like a book with a bunch of sheets of papers, but then if you add value to one sheet of paper, you write out a song, or you write out a contract that is actually worth X amount of value. It could be a contract over 12 months. Like that piece of paper is that base layer is the same value as the next piece of paper, but what is written on that piece of paper it's a contract, right, for 12 months of whatever amount the thing is. So that's interesting. That's actually a really good mental model. So my question for you is this.
Hello, and welcome to episode 3 of the Proof of Claim podcast. I'm your host, Todd Price. I'm joined with my co-host, Anil Bharat, and today we've got Jack Pitts of Slictionary fame on with us. Jack's been a long time player in or investor in financial markets and in crypto itself, or Bitcoin. I came across him in the early days after the BSV BCH fork, and I've always appreciated his insights. He's got a background in nuclear physics, being in the Navy or something like that, and so he's always brought a grounding and a really responsible philosophy to the crypto markets. And I've always appreciated his insights and capacity to discern fact from fiction in the markets and in just the stories that have surrounded it. So welcome, Jack. It's great to have you here today.
Happy to be here. Good to see you guys. And I have a lot of respect. I don't know Anil as much, but Todd, I've read most of your articles. And you always surprise me with how much detail you know on certain topics. So I'm always one of the few people I will go out of the way to read your stuff.
Oh, watch your yeah, I appreciate that.
Yeah, I'm more of a newcomer, I guess, in the space here, but it's literally the same thing. Like I actually came across Todd on LinkedIn, and I just found his breakdowns so detailed, and something that I've never really read a lot of people talking about. And so it's kind of the same thing. So I'm excited to be the co-host of this and to be able to sit alongside Todd and have these really interesting conversations with people that come onto the show. So I'm also excited, Jack, for you to be on the show. And I've been following you as long as I've basically been aware of BSV in the BSV space. I'd say, well, I definitely heard about it when it first came out. I had a little bit of BSV, I think, in 2018 or so in my Coinbase account, but then I kind of like ignored it, and then eventually it came onto my radar probably around the 2021 phase. When exactly was the Kleiman case? Was that 2021?
Well, I think it started in 2018 when it was filed, and then they started having depositions in probably spring and summer 2021, I believe, and actually may have been 2020 or maybe even 2019. It was delayed for a while. I forgot because of COVID. Actually, I think it was 2019 in the summer when a lot of the depositions happened, and then the court case was late 2021. It finished in December.
Right. So I think I might have actually. My oldest brother actually told me about it, and it might have been pretty much wrapped up when I first kind of like heard of the case. And so it was probably around that time when I really started to deep dive into BSV. And you, along with like two other people that are no longer in the space, unfortunately, were some of the people that I followed early on. So yeah, again, just super excited to have you on the call. And I'd love to kind of know.
Everybody tries to brag about how long they've been in Bitcoin or whatever. I think of it as the opposite. You should brag if you're newest to it, because you've missed all the pain, especially if you care about actually using it and aren't just sitting on it like somebody. What is it? Servant number 3 in the Bible that buries his gold, and the other 2 guys invest it.
Right. Yeah.
You're just better off being newer, because then you're bright-eyed and bushy-tailed. So Anil, it looks like
that's right.
If you've been doing stuff since 2018, that's no good. That's longer than me. But
yeah, that's a good point. That's a good point. A good perspective, at least. Well, I guess like I would say I was definitely following along, and I guess I wasn't fully active when it first started in 2018, but following along and not really active in any way. But after kind of years of like figuring out a little bit more about Bitcoin, also trying to understand like who Satoshi Nakamoto is, and like investigate who this Craig Wright character is, and like spending the time to I think I've even heard Craig say like identity is not just holding the keys or whatever, a possession of the keys. It's like a long history of like your proof and your history of what you've done. So like identity is more of a collage, and I've taken that approach of like sort of studying some of the, not necessarily studying, but just like following and watching videos of Craig and determining like, well, is this guy really it? Because that's the claim, right? That's the claim with Craig. And so yeah, I just got to the point where I'm really interested in getting more involved in the community, and here I am starting this podcast with Todd. So
well, I'm glad you mentioned that sort of stuff, because a lot of technical thinking people think that the history or the people behind something doesn't matter. And I found it to be completely opposite. If you only study the technical aspect of something, it's so sterile and boring that you don't really get into it. And it kind of makes you not like it as much. And by knowing the history and the people, especially the people who created the history, it gives you a lot more confidence in the technical aspects that you're going to run into, because you might meet some people that are old enough or have been around long enough to answer your technical questions, which is a great thing. But it also puts the technical stuff into perspective as to, oh, that's why they did it this way, because they tried electrum, which was gold and silver, and it turned out to be a messy job because you couldn't, the weights wouldn't work out because they have different densities, and so they eventually switched to all silver or all gold coins, right, instead of electrum. So like, if you know the history of maybe how gold was created and how it was mined in Lydia in ancient Turkey, and how the methods they were using to purify it and all that stuff, then things start to come in perspective on even modern stuff. Like, well, why don't we go back to the gold standard? And why should we use something called Bitcoin? And is Bitcoin based on anything? At least gold and silver have uses beyond just money. And so I think knowing the history is really important. And so I don't like it when people say stuff like, oh, well, Satoshi doesn't matter, or you're spending too much time worrying about the history or what this guy's doing or what that guy's doing. But to me, that goes together with the tech. And I got this from an early age. I had math teachers, and math is typically taught in a really boring way. Like, hey, here's the solution to the quadratic equation. Minus b squared plus or minus, and you're like, God, this is awful. But if you watch like a video on YouTube made by Veritasium that's about how mathematicians discovered the number I, the square root of -1, and in that video, it's like gotta be an hour. It's almost like a movie, a full-length movie. But it is so interesting because they tell these tales about mathematicians battling each other in ancient Bologna in Italy, and how the professor of the main math professor in the university would lose his job if anybody could ask him 10 questions that he couldn't get the majority of them right. That person, if they knew the answer, would take his job. Which is incredible history, right? And then you realize like why people will hide. Why would you hide a formula that you found that's now famous, like the Pythagorean theorem or something? Well, there are reasons, and knowing that history puts everything into perspective. It's like I can't even emphasize how important it is to put everything into perspective, and then how all the technical decisions were made, and where the mistakes are, and where the beauty and the elegance is. So
yeah, and why it's taken so long. People are frustrated that brand new cutting edge technology isn't just following a standard IT roadmap to get into existence. When you're up against, if you know the history of money, and the history of Bitcoin, and the history of when certain functionality was removed, and then when functionality was restored, you've then inherited a legacy of you don't want to be irresponsible, so you're ensuring backwards compatibility of things, of baggage that you've inherited, at the same time as trying to restore things and move forward. And it creates like a lot of things to factor into, and it's not a standard development trajectory. And sometimes you get 2 years in or 3 years into a product and you've got to throw it away and start again, and then you're another 2 or 3 years. And yeah, people seem to be impatient that they just want a ready-made product. But if you understand the history and the backstory and the people that have been involved, and what the challenge was and how the challenge was overcome, it makes a lot more sense and grounds you in like, okay, cool. Like, it's just hard to solve these problems and people are trying their best.
Imagine inventing the general email protocol in 1969, and then someone from the future comes back and says, hey man, I'm from 1999, and you know how many people are using email? It's less than 1% of the world. And you're like, really? 30 years from now it's going to take that long? And then a person comes from the future in, say, like 10 years after that, like 2009, and he's like, forget what that guy said, everybody has email now.
So
in like 10 years we got from like 0.5% to 99.9. But in the first 30 years, it went from like 100 people on ARPANET in the United States only to, several million, but is only 0.5% of the world. So, that's a scary story. And the history of like coin money, like metallic money, is even worse. It takes like 100 years for people to stop using iron spits called drachma in Greece, and and using like bronze arrowheads as money, and all these other things. And finally, everybody kind of standardizes on silver, but it takes over 100 years, if not more. I mean, I hate to mention these things because you think, okay, we're modern people, we're going to figure this stuff out logically much quicker. And I think generally that's right, but you never know. So you have to constantly go back into history that's not even related to your subject. And if you know that, you can say like, well, worst case outcome is Bitcoin hangs around for a while, but it takes a lot longer than we think.
Yeah, and you're looking at something that disrupts, email disrupted fax and letters and a few other things like that. But this is disrupting money and global money and all different players' capacity to create money and to control money and exert their influence over the creation and control of money. So it's there's economic incentives that if it can do things 1,000 times cheaper, it kind of seems like an inevitability that it will move that way in time. But the incumbents can put up a pretty good fight and stop a competitor when they we're looking at economic influence and control on the world scale. That's what we're trying to make sort of inert, or render them their power over it less, because it's a neutral commodity like information carrier that functions as money, but without any of the the way that money might give people an edge in a market or in control.
Yeah, I see so many solutions that Bitcoin can make everything we do better. Same as I saw in 1998 when the internet first started coming out, and I first got on it, I think in 96 or 97. And my mind just raced with the amount of ideas that I could think of that were obvious. And not even 15 years after that, almost everything I thought of was created. And then a few things that I didn't even have the concept of knowing what they would be or even think about happened as well. And all of it was amazing stuff. So I feel the same way about Bitcoin. So it's a little bit frustrating that it seems to be taking forever. But to our original point, going back to Anil, I got to the internet late. Like I got on in 96 and there was guys, I mean, if you watch War Games with any Matthew Broderick movie, War Games, and then Ferris Bueller's Day Off, he used the internet in both movies. And those movies came out in, I think, like 85, 83, 85, 87, somewhere around there. And yet 15 years later, we still hadn't reached 1% penetration on the internet. But Matthew Broderick was launching nuclear missiles with the internet and changing his times tardy at school from his home so that he could miss school more often, all on the internet in the early 80s. So, I feel like I hope we're not the Matthew Brodericks of Bitcoin, where we're sitting there doing this stuff and people are like, oh, all this stuff is obvious now, but you were doing it in 2019. That's incredible, Grandpa.
Yeah,
so
well,
go
ahead.
Go ahead. Oh, go ahead. Go ahead.
Well, I say people, they think, oh, you're an early investor or something like that, but you're like, no, I'm like, the attrition is high. You're ground down. You've seen so many people come and go, and you've tried so many things, and it's like you just expected the rate of adoption to be, way faster. Like I remember in 2013, I got in and watched the first pump up to $30, and then in 2011 and 2013 it starts pumping, and I'm going, this is this time it's no one can like deny it now. It's going to the moon, and then it goes down. 2017 goes up, and you're like, this is the time. And watching all those come and go, and you, I still think it is inevitable, but I'm more accepting that maybe it is 20 years before it happens, because the gap between those who are in the know and then the general like retail investors and people look at what they're looking to get out of blockchain is so vastly different. Like when you're saying you've got all these ideas of what the internet could do in 96, and I have a billion ideas now about what blockchain can do, and it's like, which one do I want to pursue? But some people are coming in and they don't have any idea of like actual utility things that blockchain can do. They just think, oh, let's create a tokenized thing that I can flip, and that, well, I hope the price will go up on. They haven't looked at it like a timestamp server, or they can't even explain what a micropayment is, where a micropayment would be useful.
Yeah, it's a great time to be alive, because if you understand how Bitcoin works, you can see you see too many things to do with it. Like you said, you have to pick one. Whereas if you see it late, then you wish that you were in early. You know what I mean? Like you come in late and a lot of things have already been done, and you feel like there's not enough ideas left. So, but if you come in late, there's probably capital by your side, and there's a wave that you can ride that's going in the direction you want it to go. But if you're in early, like now, you're just fighting the whole way stuff that shouldn't even have to be fought, but is, because it's just early. But yeah, it is kind of funny, because we're looking at a 4 to sometimes you can consider it $8 to $10 trillion market now, and so you'd think it's pretty much fully developed, but it's really not. It's in its infancy. And I'm not saying that 4 to 10 trillion is going to get bigger, because I think we're in a bubble right now. It might probably get a lot smaller by a ton before it gets bigger again. But I'm just saying that the real fundamentals of what Bitcoin can do are not even in the first, that's out of the first inning yet. We're still in the first inning, like singing the national anthem, so to speak.
So I'm curious, like, how is it that you first heard about Bitcoin? What is your kind of Bitcoin origin story?
Oh my God, I have the longest Bitcoin origin story ever. So it's a really bad question to ask me, but let me see if I can be shorter than I've ever been in the past. I have made a career of trying to predict what the world needs in terms of products and technology, and most of that has been applied to investing in the past. That's changing, because I've always sworn to myself that I wouldn't miss the next trend being in it rather than just investing in it. So my interest in something like Bitcoin started probably in the late 90s, where I recognized that there was a problem with money and that fiat really wasn't money. I mean, sure, von Mises has kind of 3 definitions for money. One is fiat, 2 is what I call debt money, or in the US, we have what's called greenbacks, which where you bring in the paper money and we'll give you the gold kind of thing. So it's a backed token. So the paper currency is a token of what it really should be, which is an ounce of gold or whatever. And von Mises would call that sort of like a debt money. And then the third, really the only definition of money that I consider to be the real definition of money, is a commodity. So it's a useful asset that's been commoditized so that it can flow and move fast, and everybody recognizes what it is, and you don't have to spend a ton of time verifying it. And that's what a commodity does. That's what commoditizing an asset does. So to me, one of the biggest problems in the world is that we've gotten to be a whole world full of fiat, which means all the governments can kind of go wild. Does anybody remember Girls Gone Wild? those old movies about like spring break.
Absolutely not. I do not know what
Spring
you're talking about.
Like feds and nations and presidents gone wild and Congresses, right? They've got these printing presses and they can just do all kinds of crazy stuff and none of it's good, right? It's like handing your 7-year-old a credit card and just saying go nuts, right? Like what could happen? Well, he's going to buy all kinds of crazy stuff and you're going to end up in debt. That's what can happen, and then you're going to crash. So it's the same thing with nations. You give them too much leeway and disconnect them from the people, such that they can rattle this printing press. And it's amazing. It's probably the biggest problem in the world at this point. And mostly it affects the poor, the working poor who have cash balances, because that's what gets diluted. And so I've always been interested in solving that problem. And when you start studying the history of this, you realize that the only real money for the past 3,000 years has been coin money. Particularly silver coins has been the basis for almost every money in the world going back to 650 BC. So are we going to go back to that? So I kind of thought, yes, at some point we would have to go back to that money, because that's just the way the cycle works. The paper money never lasts. For instance, it died in the Confederacy in the American Civil War in 1860s. It also died in the American Revolution. And those are just the two most recent examples. There's many more. John Law in France, South Sea Bubble, all the English war debt. It just happens over and over. The paper money never survives. And so I started looking for solutions all the way back in the 90s. And as a guy who loves tech and is very scientifically oriented, you think that there's some kind of technical thing that might work. And so back around 98, I read an article in the Wall Street Journal about something called gold money. It might even been an advertisement. I don't remember, but I researched it, and it was basically saying, like, we can store your gold in some vault in, say, the Bahamas or something. It sounds like an awful place to store gold, but I think that's where it was for gold money. And then we can issue tickets, or similar to like a paper currency, but it's digital, so faster. And each digital certificate will be verified by us, this centralized, organization in the Bahamas. It sounds really scary when I say it that way, and that's because it is a little scary. And they can issue these things and control them, and then you can just spend the digital tokens. And it turns out that I was first introduced to gold money, which is sort of like the Red Sox to the Yankees, or the Yale to the Harvard, kind of the number 2 gold-based digital currency. The number 1 one was eGold. And these two companies were in this kind of new market super early. And the problem was that I found is I was like, oh, well, maybe I'll just get some of this. And it sounds like it's something that'll take off. Like all these other internet things are taking off. Online travel, search, all these things are taking off. Why not this? And why don't I get on it early and get myself some gold money tickets, digital tickets? And hopefully more and more, businesses and vendors will accept it. It'll just become the money of the world. And it's based on gold. So that's great. And then, you'll save versus gold coins. You don't have to move them around. You don't have to have giant trucks with security guards all over them, all this stuff. So this digital form of, say, gold or silver coins is kind of an interesting idea. The problem that I finally dismissed it was some company in the Bahamas I have to trust, like this one company and one guy running this company. I have to rely on them being honest and not, screwing with the system. And then, by the way, making off with all the gold, right? Like they could just, as they call it, rug pulling today, they could rug pull. And even if they only sold $20 million worth of this stuff, you've put your fiat in to buy this gold that someone else stores under their basement in the Bahamas. And next thing you know, it's gone, and they've erased everything on the internet. And what are you going to do? And plus, maybe it's only $1,000 to you times 1 million people is $1 billion. And that guy just now he's got a basement that's a giant brick of gold, and he's set for life, and who cares about you? So that was the flaw in the ointment, which I realized in 98. And so I didn't understand how to build Bitcoin or understand anything about what Bitcoin was going to be. And I didn't even see it when it came out, probably for 10 straight years. I just thought Bitcoin was a screwed up, faulty, unbacked, not real money, like monopoly money, bullshit money. So
when was it that you first heard about it? Like, what year would you say that was?
Again, you're asking all the right questions to make this a really long introduction. But I had a guy in my investment firm, which is a very small investment firm, or maybe 4 analysts, right, that do real research. And he came up to me one day and he was like, "Have you heard about this Bitcoin?" And I'm like, "Actually, I had heard of it because I read everything about everything tech, but I'd only just barely grazed it. There happened to be some article in like 2010 about these nerds and geeks using money to pay each other for technology like favors." And I was like, I probably read the article and was like, okay, so it's a fake money that they just believe works. So it's all based on faith. It's not going to work. So I immediately dismissed it. And it turns out he was asking me because he was a jiu-jitsu guy in like 2010. And if you know anything about jiu-jitsu, you can kind of go anywhere in the world and like roll with other, fight other guys in their gym. Like if you're visiting New York and you're from, say, Florida or even Australia, you can just, somebody will say, "Oh, who's your, where'd you get your belt?" And everybody kind of knows somebody who knows somebody else, like 2 degrees separation. So anyway, Roger Ver is in the BJJ. So he ends up in a gym in New York City in Manhattan in the same gym as my colleague. And Roger Ver gives out these actual coins, each one worth 1 Bitcoin, which now is whatever, $110,000. And he gives them out to everybody in the gym because he's sort of like, he's getting his workout in, but he's in New York City. So he's like, I might as well do some promotional stuff while I'm at the gym. Right? And so this guy comes in and is like, this Bitcoin thing just, got, sent to me. It couldn't have been, this had to be late 2010. I don't even think Bitcoin had a price north of $1 at this point, right? So I sort of like noted it and I was like, this goofy money, like there's not much to do with it, but maybe if it dives or something and there's one last blast of speculative juice, maybe you can do something with it. And so I've always followed it since then, but I've never taken it seriously because I couldn't figure out how it was a commodity money. Which, again, going back to von Mises, the three pieces of money: fiat, debt money, and real commodity. If it's not a real commodity, I just don't care about it. It's not the solution that we're looking for. So faith-based money, I think it's money, you think it's money, therefore we can use it as money for a little while and it'll hold its value. That doesn't work because eventually in a recession or depression, people will get rid of their money, right? They'll trade it for cheap stuff, right? When houses get cheap, you liquidate your cash assets and you buy a cheap house because you've never seen a price that low before. Same thing with cars and all that stuff. So you need kind of an economic depression or a price deflation to truly test a money or anything that's called money, a currency, fiat, whatever. That's one of the reasons why, like, the American Fed doesn't want a recession to happen. That's why they bailed the big banks out in 2009. That's why they bailed everybody out in 2020. Why is the richest man in the world, Warren Buffett, getting bailed out in 2020 of his bad airline and bank stocks? That's crazy, right? If anybody could take the punishment of losing and making a bad investment decision, it's him. But yet the American taxpayer bails him out. So it doesn't make any sense. So I would say that the first time I realized that Bitcoin could be a commodity with real value, real fundamental value, similar to, say, silver, which can be used in wiring, it can be used to sterilize things, like one with a silver spoon in your mouth, et cetera, et cetera. It has real uses. And so does Bitcoin once you understand how it works and what it does. But that's the rub. Most people aren't going to do that research because it involves a lot of understanding and experience. But I will say that once you realize how useful it is, you realize that it's as hard-backed money, Bitcoin that is, as a gold or a silver coin, or anything else that's been used as hard money in the past that has real value. So in 2019, actually 2018 and 19, just for fun, I would always try and figure out who Satoshi Nakamoto is. And so I was doing a lot of research into that, and I found something else that I had been looking for previously, but wasn't looking for at the time. I found the only person ever in cryptocurrency that made any sense and could describe everything in a logical way that made real scientific and economic sense. Am I allowed to say who that person is?
Yeah, go ahead.
Yeah, we're definitely, you're allowed to say we're actually going to be interviewing him this week. So,
well, good, because I was reading all kinds of books and articles by other people would tell me are experts at Bitcoin or cryptocurrencies, and none of it made a lick of sense to me. And as a technical person, I always say, like, if you can't explain it pretty simply, you're probably just speaking technobabble and trying to wow people with your big words, but you're not really making any sense. It's okay to use big words if you aren't able to relate to someone who's down lower than you, that's fine. But if that person down lower asks questions and you're not answering them with any kind of logic or sense, and it doesn't click, then there's something wrong. Meaning it's not real. And so that was what my experience with all of cryptocurrency is. I would try and dig down to, okay, well, prove to me that it's not just faith-based money, and then I'll get interested. And nobody could do that, and nobody could even explain how it works, honestly. They would explain certain technical things, but they couldn't explain the why behind the technical things. Like, why does it do this that way? And what is the purpose of the blocks and the Merkle tree and all this stuff? And people would say there's a Merkle tree in Bitcoin, for instance. But then you'd say, well, why is there a Merkle tree in Bitcoin? And nobody could answer that. Okay, so or something like selfish mining, right? There's an entire paper on it written by a Cornell professor saying that there's a hack that you can use on Bitcoin, and then there's a rebuttal that you can read. And the rebuttal was just much better than the paper, and the rebuttal was written by a man named Craig Wright. And so once I read that and realized that the math behind what he was saying was true, and that the guy who wrote the original paper was missing a few things, you just start to see that there's only one guy that can really explain stuff that makes any logical, physical, scientific, and economic sense. And unfortunately, that guy's Craig Wright, which everybody believes is the only bad person in crypto, which is kind of a joke because almost everybody in crypto is kind of a huckster. So I just consumed everything that he wrote or said, and my knowledge of Bitcoin just got stronger and stronger and stronger to the point where, I could talk to anybody about Bitcoin and not feel like they can talk over me or around me. I may not, be doing the most programming in Bitcoin script or something. There's many other people that are more technical than me, but there's nobody can really snow job me at this point on any aspect, whether it be technical or economic. So I feel like I'm in a pretty good position to say with clarity that Bitcoin is a commodity. It's based on information and computation. And because information and computation have monetary value, then so does Bitcoin, because Bitcoin is a carrier of information, data, timestamp serving, all these things that databases do. It's just that it's commoditized it. It's put it into pieces called coins, digital coins. So to relate this to say 650 BC, everybody was mining gold and silver, and they had a lot of uses for it, right? They would cover their treasure chests in it. They would make rings, all kinds of things. Some people say the steeple or the triangular dome of the pyramids was flaked in gold, for mirror purposes, whatever. They had a lot of uses for it. They hadn't commoditized it into something that, like we think of as, say, grain bags, where it's like we could just weigh them, measure them on a balance, and know that this one's equal to this one. And if you check every once in a while a bag, make sure it isn't filled with sand or something, you'll know that you have a bag of valuable grain. And so things like grain was money, iron, bronze, all these things were money when they were commoditized. So when they came in a standard shape and weight, that's what commoditizes it, right? And so the coin is what commoditized silver and gold, and it became universal. So the denarius in, say, ancient Rome, or the drachma in ancient Macedonia, they became a standard weight silver coin. The pound sterling, the American dollar is based on an ounce of silver. So it's almost a continuous thousands of year run of one little round thing stamped at the same weight and roughly the same purity has been money for 3,000 years. And so it's got to be this commoditized information. So an Oracle database, even AWS, these are all purchased not so much in a commoditized manner. There's not containers of information that you can buy and sell. But with Bitcoin, there is. And the container is called a coin or a UTXO. And so this commoditization of information and computation is what's interesting to me, because the Bitcoin network can grow to an unbounded size. It can grow as big or bigger than the internet. And so the network itself can handle all the computation that human beings ever need to do. But since there's a limited number of containers, the container value can go up and down with demand. And that's interesting to me. That tells me that the value of the information on the Bitcoin network roughly translate. I can make it exact if you want, but I haven't written that paper yet. But I can tell you exactly how a Bitcoin gets its fundamental price, especially at scale. Right now, there's not a lot of use cases that give the information on the Bitcoin network a lot of value. So right now it's cheap. But at scale, the value of the information on the network is literally what, I don't even say backs the coin, because it's not backed by information. It is the information. So the coin and the information is on each coin. And so it's exactly like a silver coin, right? You're getting the silver in the coin is what you're getting. In a Bitcoin, you're getting the ability to move information quickly, securely, broadly, and cheaply. But you're also, there's a limited supply, right? So if I've got a Bitcoin here that has valuable information on it, I'm not giving that up, right? I'm not going to melt it and turn it into like a blank coin that you can use for money. I'm not spending Craig Wright's definition of Bitcoin, because that's a historical artifact, right? It's got a lot of value. It might sit on $100 worth of Bitcoin, but I'm not going to spend that $100 bill. I'm going to spend this $100 bill because this has nothing on it. This is a coin that's spent as money and can be split and moved around like money. And this is the thing that the coins build, right? This is like King Tut's helmet, right? There's 300 ounces of gold in King Tut's helmet. But you're not going to melt that down because it's worth 300 times whatever the price of an ounce of gold is. It's worth millions of dollars, right? It's an old artifact that's valued because gold created something with the commodity that's worth more than its value melted down. And that sort of balance between things you make with Bitcoin, which is information and computation, and payments, right? The payments is a blank, empty Bitcoin that only functions as money. Everything else on the Bitcoin network has informational value to it. And that play between the two is where we get price discovery as to what Bitcoin should cost to obtain.
Yeah, that's kind of how I've thought about it is, if Bitcoin is like a universal registered message delivery system, and the Satoshis, because at the moment, say with TAL, they set their policy as 1.49 kilobytes per Satoshi. So you've kind of got like this, the Satoshis themselves that you need to pay, a minimum transaction is going to cost 1 Satoshi. So the Satoshi is like a postage stamp, but certain postage stamps are collectibles, and they have, actual meaning attached to them. And then also it's not only a postage stamp, because the output itself can carry data at one Satoshi per 1.49 kilobytes. So it's like a message satchel. You're paying for the envelope, which is the Satoshi, and then you're putting a stamp on that, and it's fixed at these regular units. Each 1.5 kilobytes, you're paying 1 Satoshi to do it. So it's sort of like saying a 20-foot shipping container costs this much, and a 40-foot shipping container costs this much. And you're fixing this, you're standardizing the way of pricing for data to have a timestamp applied, for data to be processed against other via this script and the predicate. So looking at it, it's the only system as well where you can actually use the smallest unit. You can carry it. Every other system is like, we've got 100 billion or we've got this and that, but you're always making transactions far above the minimum unit. So what's the point of having the minimum units if you can't actually granularly spend them? And being able to do it down at that level of 100 millionth of a coin, and then that data now is 1.5 kilobytes per Satoshi, but with Moore's law, the nodes will be able to process more, the bandwidth will increase. So in 2 years, you might find that you're getting 3 kilobytes per Satoshi, and in 5 years, you're getting 10 kilobytes per Satoshi, and it invites more and more use of the system as it scales, because it's bound to the computational resources, which are essentially doubling every 18 months as the transistors are getting half as small or half as cheap or something like that.
Yeah, I wrote an article in summer of 2021. I think it's called like "What is Bitcoin?" It's on Medium, and I didn't give away the kind of answer as to what the exact price of a Bitcoin should be and how it's derived. I sort of covered the what we would call in the stock world as the equity or intrinsic value, the book value, and that's related to what you're talking about, Todd. So the book value of Bitcoin would kind of be the cost of reproducing the Bitcoin network physically with machines and the ability, the speeds that you need to get to wherever we are in terms of speed of transaction, security, the breadth that we have across the world, and the cheapness or the price of the fee. And if you divide that sort of replacement value divided by the number of coins, you would come up with a price. And I think I do it in the article, and it comes out to it could be as low as 45 cents or something like that. And that was back in 2021 per Bitcoin, which is much lower than even BSV and BTC. Oh my God, 110,000. I mean, you're talking about a major crash about to happen if you relied on that. Now, luckily, the real price discovery of Bitcoin could be in times of stress related to that, I guess, if sentiment got really negative, like if the whole crypto market crashed, and that's when things tend to go towards their book value, when things get really negative. But in reality, the price is related to the information on the network and to a very specific piece of information. And I'll give you the example of a train that has like maybe no seats left, and you need to go from, say, New York to Chicago for a wedding or something, and there's no way to get a ticket. So how do you get on that train? Well, if you could walk onto the car while it's still in the station, wave your pile of cash and say, will someone get up and give me their seat for $50? Well, who's going to say yes and who's going to say no? Maybe everybody says yes. So you raise it to $100, then 200, then 300. When are you going to get to the price discovery of what a seat is worth at that moment? Give me the answer. Like, what's going to happen in this scenario, and who is it going to be, and what's going to be the reasoning for finally selling their seat and getting off the train and having to figure out how to get to the place some other way?
Yeah, so that's the competing priorities. So how much does it mean to you? What is the opportunity? Like, is there an economic cost? Are you just going for leisure? Are you going to catch up with some friends? Are you going there for business? So certain people are going there to do a deal that's worth $100 million on that train. Other people are going there to see their newborn son. Other people are going there just, to go up there for the weekend. So that person who's going up there for the weekend and was maybe going to spend $1,000, they're happy to get $2,000 to be able to go another time. Yeah.
You've got the half of it. So the demand in this situation would be the person, let's say he's a billionaire and he wants to get to a wedding, and the wedding is tomorrow, and the only way to get there is on this train. It's his only option. And to him, maybe it's his daughter, right? So he's going to spend, maybe he's already spending $500,000 on the wedding itself. So to him, like, he might be willing to spend $100,000. But do you think that he's ever going to, that's on 100 people sitting in a train, that it's going to take him to 100,000? Do you think that's what the price that he's going to pay is? What price do you think he's going to pay, and why?
What was the original ticket price?
The original ticket price was $10.
Yeah, he would likely get away with it for like $150 or something like that, I think.
Right.
Yeah.
But why? Like, think about the 100 different people on the train. Maybe the first guy on the train is his brother, right? And he's going, so he's not giving up his ticket, and he's got the same reasoning as he does. So maybe it's not 100,000 for his brother; it might be 1,000, right? So he's not going to sell his ticket. Who is going to sell the ticket?
Yeah, the people they're not important for them to be there, really.
But not just the people. There's going to be one person.
The first one that doesn't matter the least to.
The least important person on the train, grandma, who's like, I'm just going to Chicago to sightsee. Like, I could go next weekend, right? And I live right next to the train station. I walked here; it's a block. So she's like,
I'll have $150 to spend next weekend too. Sick. Yeah.
So it's basically the person with the least skin in the game, then.
The least skin in the game. That's correctly. The least valuable ticket is what the price is going to end up being, regardless of the fact that the billionaire would spend all the way up to, if everybody secretly got into an agreement and said, like, if we just wait, it's like one of those, what's that stupid show that everybody watches now where they make deals and there's like 1,000 people and it's like, if you do this, you get a little bit of money, but if you wait, you get a lot of money, and then it becomes a contest. Mr. Beast.
No deal. Yeah, right.
You know what I'm talking about, Mr. Beast?
I don't really pay much attention to that stuff, but I can imagine the mechanics because it's sort of similarly reproduced,
This guy's as famous as Donald Trump, let me tell you. So you'll look it up afterwards. But anyway, Mr. Beast forces people to think about all these types of things in a granular way that you can understand, anybody can understand. But this would be the situation for price discovery in a market, right? So sure, one guy might want to pay $100,000 because that's what the ticket's value is to him, but the settlement price is actually going to be based on the weakest seller, the one who cares the least. Same with Bitcoin, right? You have, let's say there's 3 Bitcoins, right? This Bitcoin has Satoshi's white paper on it that he etched into the blockchain on January 4th, and it will never be reproduced again. It's a one of a kind, and it can be sold in a museum for like $1 million, right? And you can own it in your wallet. You can walk around and say, I have Satoshi's original white paper sitting here on this coin that he put here on January 4th, 2009. How cool is that? And you can whip it out at any time. It's like a museum piece worth $1 million. This one is a picture of my daughter's, happiest moment in her wedding, right? Like, okay, it's not worth $1 million, but maybe it's worth 10,000, right? So like when someone comes to buy the Bitcoins, because the third Bitcoin's already being used for transactions over here, and so nobody has time to sell that because it's moving around too much. These two are available. So which one's going to get sold off? My wedding picture. I'm going to be like, you know what, delete that thing. And it breaks up. If it's one Bitcoin, it breaks up into 100 million pieces, right? They can now all be used for trade. So mine's going to get melted down and this one's going to stay. And then the Bitcoin network will continue. But that price discovery is based on the weakest informational coin. That's the one that gets broken up and becomes money, right?
Mm-hmm. Mm-hmm.
It's basically like a deleting. What information of the world is least important and can be deleted. And that divided by the number of Satoshis equals the Bitcoin price.
Yeah, it's like decay. Like an informational decay, you know, when it's no longer relevant, then those ones will move back into circulation rather than being something that's binding, you know, a payload atop of it.
Right. And it works exactly like every other commodity. So when the value of Bitcoin gets so low that you'll put pictures of your cat on the blockchain, right? That's pretty low. But then when the value starts climbing, it's like, oh my God, I got these stupid cat photos on the blockchain. They're sitting in 45 coins in my wallet. Now those 45 coins are worth $45,000. Well, I mean, the great thing about Bitcoin is you can actually probably extract the pictures and put them on just a regular key drive or something, take them off of the internet, delete those coins by selling them. And sure, you don't have cat pictures on the blockchain anymore with provable, you know, timestamping, but who cares? You got $45,000. So this is the price discovery mechanism. That's the fundamental price discovery mechanism of Bitcoin. Now, there's another way to view this that is sort of what I would call the more Craig way, which is he's a little bit more, he's way more technical and geeky than I am, let's say. So he thinks of all this as like, well, Bitcoin can be used, all the coins can be used as like a, what do they call it? What do they call it at Stanford? The hive thing. Sometimes he mentions it. Swarm optimization, right? So like you could have like math problems be done at the absolute pinnacle of efficiency using coins for, you know, the plus sign, the minus sign, like one thing adds, another thing divides, and have it all the coins interact in a concerto, like an orchestra.
Yeah.
Or like a computer program, right? And they can all do this super efficient, especially as the Bitcoin network gets bigger, more efficient, faster, cheaper, all that stuff becomes the internet computer or the Bitcoin computer. Then you're measuring, then you need Satoshis for operations to move around, right? And so that's sort of like the velocity theory of money in economics. And I don't subscribe 100% to that, but it does relate, right? Because if you have an orchestra of coins that all interact and do this thing, and that thing's very valuable to people, well, then you're not going to give up that orchestra of coins to just become stupid money, right? You're not going to melt that system down because the price of Bitcoin's gone up, right? That system.
That one probably comes into play at scale, whereas the first one's there with a little bit more of the sentimentality and the playfulness. But as you move to say, like doing something like just storing the hashed timestamp, you know, it's timestamping the hash of a document. So like even with OneSat protocol, they use the payloads stored elsewhere. You can sort of embed it in the one sat, but you then can spend it onto the next Satoshi as well, because it sort of transfers, and the semantic mapping is tracked in indexer and the overlay to apply it onto a new Satoshi if the protocol was followed where the first outputs one Satoshi was going to be what's carrying the new thing. So you're moving away from, and if you're using Operaturn to put the data on there, your cat pictures, you're not binding that to an economic unit either. So it just becomes like an account. That's what Craig says. It's not designed to be an account-based system where you just use your address and you use the Operaturn of that, and the blockchain is going to store that garbage forever, because then it's an account that's aliasable by the address and it's just having stuff dumped there, and you're going to be able to do a retrieval call from the network to be served the data that's associated. So it's no economic cost. So the miners eventually are going to prune that in a recirculating fashion once, you know, they're actually starting to exhaust some of their disks, you know, by economically weighted transactions.
I have a question for you, Jack. So what you described with like the way I envisioned it or tried to understand it was like you've got this commodity Bitcoin and then you've got this other Bitcoin where you have some sort of value built on top of it. So I was thinking, so the commodity Bitcoin could be like, you can imagine it as like a book with a bunch of sheets of papers. But then if you add value to one sheet of paper, you write out a song or you write out a contract that is actually worth X amount of value. It could be a contract over 12 months. Like that piece of paper is that base layer is the same value as the next piece of paper, but what is written on that piece of paper it's a contract, right? For 12 months of whatever amount the thing is. So that's interesting. That's actually a really good mental model. So my question for you is this, is that like, what is the technical term for that? Is that the same thing as an inscription? And what, if so, what is an inscription? If not, what exactly is the technical term for what you described?
Yeah, the inscription concept is probably the first step to, I think, people understanding this value concept in Bitcoin. I mean, I guess I'm just barely old enough to be able to say I've watched people figure out stuff that seemed to me to be obvious in the beginning, which is the first thing they did was put all the data onto Operaturns, which have a 0 Satoshi value. And as Todd just pointed out, those are prunable, right? So that's like spam or clutter. And they're not Satoshis, and the nodes are not bound to keep them or to keep track of them, and don't have to. And they will not lose blocks because they don't know that this Operaturn exists or not. Because the only way to win these expensive blocks is by managing the actual UTXO set, and UTXOs are dependent on Satoshis. So that's the only thing a node has to track. Section, 7 of the white paper is pruning, right? So the only thing that matters is the current base of coins. The old transactions, they don't matter anymore. I mean, you can keep them if you like, but it's kind of like keeping the ledger in your checkbook. Like, the only thing that really matters is you have $100 in your account, right? If you lose the ledger, you haven't lost much. You may have lost some information that you value about what you did in the past, but the world doesn't care. All the world cares about is that, okay, you still have $100. At least you didn't burn that. And that's the value. And that's all the nodes care about. They just care about keeping the coin set intact and secure and moving fast and cheaply. Everything else is your problem, right? And so op return is not an inscription. It could be, I guess, considered an inscription if you didn't care that it was prunable. But most people care that this blockchain thing is an immutable ledger, and so it has to be on a Satoshi. So that was the first thing they sort of figured out. Like in 2020, I could talk until I was blue in the face about using a Satoshi, and everybody's like, "Wow, why would you do that? That's just wasting money." Because I want to put all my stock certificates, and there's a billion of them on Bitcoin, and a billion times, let's say, 1,000 Satoshis is going to be a significant amount of money. So or even one Satoshi is going to be a significant amount of money. So I'd rather just have them on no Satoshis. There's literally whole businesses in BSV even, and I consider them to be the smartest in crypto. BSV businesses were built on 0 Satoshi op returns, which I thought is the biggest misunderstanding of Bitcoin. You might as well just been on BTC or some other like chain that doesn't scale, because it's that big of a mental error. So I think when Ordinals came along, at least people got that much. Like, every Ordinal is at least on 1 Satoshi. And when you put data onto that 1 Satoshi, that's what people call inscriptions. To me, I just call it common sense. Like, there doesn't even need to be a name for it. It's like, you're going to use the Bitcoin network, you're going to use Satoshis. That's what it does. It's a Satoshi system. It's not we just store the information on an op return, which has no record keeping, no timestamp. It's just something that can be pruned.
But you don't get to actually like track each Satoshi. Doesn't really have a serial number. There's 100 million going in, and there's 999,000, like 999 or whatever going out with minus the fee. So the only way that they can actually say that this one sat is the same one sat that carries it once it's been spent is by saying you need to make the one sat output the first index position in the output, so that the whatever's passing it can look at the transaction and go, the first output, it is for one sat. Cool, this is now where we've updated the inscription onto this Satoshi, but it's not technically the same Satoshi. It's just a system of tracking and applying it. Yes. This is now the one Satoshi that carries it.
So the ordinals that people talk about is what somebody like Craig would call an overlay network. It's one organization called, say, the Ordinals organization is saying, we're going to keep track, we're going to put serial numbers on all the Satoshis for you. And then we're going to say, when you spend them and stuff, where the serial number goes. Because like everybody knows, the basics of Bitcoin is you send input into a transaction and there's 3 outputs. Well, those 3 outputs are completely different from the input. And they're not really related to each other anymore. But you could make them related by saying, well, this is A and this is B and this is C, and we'll always call it that way. And you could say, like, well, if this was code number 17, we'll make the first output code number 17, and we'll give these 2 new numbers, right? And that's what the ordinal system does. It's just one organization's opinion of tracking the coins as if they had serial numbers on them, but they don't. They don't have serial number. I mean, the transactions have sort of like a serial number, but like the Bitcoins can just constantly change all the time and get new numbers. So there's no like one system. So the ordinals is a way to try and take a UTXO system and serialize it according to what one organization wants. But I think that the thing that still gives me an edge, where I know I'm still a little bit ahead of where the curve is you don't really need that. Like there's ways to do what people want to get out of these ordinal system without having to give some authority, some third-party organization called the Ordinals organization, which ultimately is probably going to be run by one guy, whatever that asshole's name is that invented it on BTC. What's his name? Does anybody remember his name?
Casey.
Yeah.
Casey Starmer. I don't know. But yeah, and you need to have a wallet that supports ordinals, because otherwise, once you spend an output that was inscribed with a wallet that's not supporting it, it just is like obliterated, and it just becomes an arbitrary Satoshi again, or like aggregated into the next output. So it's only tracked when you're moving it through wallets that support ordinals and us actually scrutinizing the output. Oh yeah, the first output, that's the one sat. Cool, now it's carrying this inscription of its ordinality or its serial number. Now we're going to say which address or something that serial number is associated with. So it's tracking it with a primitive overlay, which they're just calling an indexer, because it's simply doing that one mapping of a payload or a serial number to an arbitrary Satoshi that fulfills a particular index position in the output list. But an overlay can do so much more and can track transactions and spendable outputs to be put into all manner of downstream workflows. So it's a step in. It's cool that they started doing it, but I think I would rather use the overlay services or something like that than a one-sat indexer and have to extend the indexer into my own bespoke way.
If you think about the basics of it, of what the indexer gives you, I like to put things into actual examples because it's the easiest to understand. I mean, talking abstracts, it's very hard, but a simple example would be something like in math and physics, you have all these contests. Like, well, who came up with the 4-dimensional algebra first, the quaternions? Like, was it this professor? Was it William Rowan Hamilton, or did some German guy actually come up with it? But there was a language barrier, and so it didn't get out as fast as the English guy. So we attribute all the fame and fortune to the English guy, but it turns out it was the German that really did it. This comes into play when you talk about Tesla versus Edison, right? Like, you really get down to the only thing that Tesla actually invented, if you can even say he invented it, was a two-phase motor. It had already been invented in Italy and was being used commercially at the World's Fair to transfer electricity long distances. And the real invention that the Italians thought wasn't so much the two-phase electrical generator. It was the transformers that they needed to get from, say, Germany to the World's Fair in France or Italy or whatever. But like, Tesla was prolific, and he was from Europe, and so he contacted Europe all the time. And these Italians that had invented it talked about it ad infinitum, right? They were just constantly, they were giving whole lectures on it to colleges. So like, and writing books on it. So it would have been easy over a series of weeks or months for Tesla to get this information. And he speaks, the European language that it was written in. So like, then all he has to do is file the patent in the United States and be like, hey, I invented this thing. But all he really did is he's, good at reading technical papers, and he reproduced it in the United States where nobody knew anything yet. And it's ironic because the only really thing he actually invented. But now we're ascribing that, he invented new ways to do energy, all this other stuff. But like, this would have been perfect for Bitcoin, because in Bitcoin, the Italians would have just put their stamp down and say, here's the two-phase induction motor. Here's how you create it. Here's all the circuitry you need. Here's how to design it down to the slightest detail. And it sits on a coin. It can be verified on the Merkle tree, with the branching information. And you could say, well, there it is. It's sitting there like Satoshi's coin in January 3rd, 2009. It has the newspaper article on it, right?
Times of chancellor, yeah.
Yeah, there's no way to debate it. And then Tesla's like, oh, well, here's my patent. And it's a year later. Well, we know who invented it, right? Okay, maybe we could say, if we were nice to Tesla, like, all right, well, you invented it independently. You didn't know that it was already invented. You came up with it all by yourself, even though you can never really describe it all that well. But anyway, this is kind of where the ordinals kind of almost isn't even needed, right? Because the Bitcoin system already does it. And if you're really worried about what's the problem where you're trying to trace it back, if you're actually going to move the coin with the information on it, then you're going to need to do some special things to be able to trace it back to its starting point, right? So
without the indexer, you have the back to Genesis problem without the indexer that's said here's the history and stored it all. Yeah.
Right, but there's methods, zero knowledge proofs you can use, and there's certain algorithms you can use to trace back to that. There's certain, in other words, you can design a system that has nothing to do with ordinals or anybody keeping track of anything, where you can have your information stay on a coin and continue to move into modern times. And even though the nodes are deleting and pruning everything from the past, you can still prove that your coin existed at this time with this exact information on it. And if no one has the proof that's earlier than that, then you have the original or the oldest one.
Yeah, I think Stefan February does that with his token standard. Stefan February Beta Papa, and then I think Freddie Honahan's with ELAS, he has a Bitcoin on one layer transactions and their tokens, but they involve using, I think, 3 transactions to do that process. So it sort of embeds the proof into the next one, and then it can point back to its the header or the Merkle root.
Yeah, that's how I would have designed it. Who's the Stefan one you're talking about?
He's got the Overnode is coming. He's got the sort of frizzy hair South African guy, Stefan February. So he did I can't remember what his token is called.
Does he have a name for the project?
On X he goes by Bearded Papa, and then
I heard of that Overnode as well. Yeah, I database heard about that.
Yeah. Okay. Yeah, I do know him, and I know that I just saw him post something about his he has like a database website that you can. It was just today I read it. Like, you can put movies and pictures on it and stuff.
So it's a peer-to-peer thing that's using like libSV as a peer-to-peer network, and essentially everything's done with SPV and Merkle path. I don't know if he's embedded his token standard in it. Like, I think he did that as a bit of a side project, but he's trying to move to everyone running their own Overnode and operating, being able to stream content, run X spaces, do all these kind of things out of with Bitcoin transactions. I'm not sure if he's doing payment channels or he's just simply using it with the timestamp and then SPV. But yeah, I'm excited to see where he's going with that, and he does have a solution that solves the back to Genesis natively without relying on an indexer or something. Yeah,
he's a really good guy. I've talked to him. Super refined understanding, and it does not surprise me at all that he's doing that. Yep.
Yeah. And then Freddie's he's waiting for the Chronicle upgrade, because then you can put opcodes in the unlocking script rather than just push data. So once you can do that, then you can chain the transactions in this way that there's actually a script evaluation done in the unlocking script against a pre-image or something that's supplied from an earlier transaction. But I don't have the full mechanism fleshed out, and I'm keen to see it in action.
Yeah, that's brilliant. He's going to increasingly become a valuable guy if
for sure. Yeah.
If we start getting into this stuff, that's the kind of knowledge that's going to be super valuable.
Yeah.
So John, let me ask you this. I think like on this call, we were going to talk a little bit about price and BSV and why that matters. But before you get into that, no. Some people think it doesn't.
Now let's talk about price and BSV. That's
yeah. But before we get into that, why don't we start with like your perspective on the state of the market? I know Bitcoin itself is kind of going through some, there's rumblings of potentially some, Bitcoin split, fork splits that might happen there. So maybe if you could comment on that, and like even I'm curious to hear your thoughts on like where you think we are in this Bitcoin bull run. Are we like pretty much at the top and we're already down going into the bear market, or do you think there's still a leg up? And then just curious to hear your thoughts on those things.
Well, I would say that I think if we were to compare it to say .com, right? If you looked at the .com companies in say 1997 through 99, when all the prices of the company stocks were going vertical and all you had to do was know nothing. If you knew nothing, it was better, because then you would just hear something, you would buy it, and it would go up the next day 100%. So, I mean, things were easy back then. I think we're pretty close to a top, maybe not so much in number of days or months or years, but in price. So in other words, like if you multiply everything out, there's only about $6 trillion of US dollars in circulation in the world. That's actually a lot, because I think 100 years ago, the number was probably not even in the tens of billions. So you really don't need that much money. The population hasn't grown that much in the United States or even in the world. So 6 trillion is excessive. That's the money printing talking. And so BTC is, what is it? It's over $1 trillion, right? It's approaching 2 trillion.
Yeah, 2 trillion.
I think it's 2, yeah.
It's already 2 trillion. So the United States dollar money supply was like 3 trillion before COVID. That's like 5-6 years ago, right? So we're saying that BTC already has in circulation the amount of money that was the US dollar 5-6 years ago, which is insane. Like how much fake bullshit money that isn't terribly usable and has to be moved around in giant chunks, otherwise the fees will eat you alive. How much of that do you need? How much digital gold do you really need? Like, the BTC hodl monkeys will all tell you that, well, you have to compare it to gold. And gold is really tough. I mean, you can go on the internet and get a lot of figures, and I can tell you for sure that a lot of the figures are wrong, because gold and silver markets, they do things like, I used to study gold and silver mining companies, and they would tell you how much gold and silver they have, but like they would tell you, they would add, they had different categories for how much silver and gold they had, and they would have these really big numbers that they say they had in inventory, but their inventory has a category for silver and gold ore in the ground. So like if you're a Canadian bullshit mining company, you can be like, well, we have $40 billion of gold in the ground, so why is our stock trading for only 200 million? Like, okay, but you've got to get it out of the ground. You've got to, break up the ore. You've got to melt it down. First of all, we have to even believe that you know how much gold is in the ground, because you're using some kind of estimate. There could be no gold in the ground at all. Your land could have no gold on it. You're just making an assumption that because some other successful mining company over there got gold, that you're going to get gold. But maybe, but you still haven't got it out of the ground yet. So it's really not worth anything. It's worth whatever the price you paid for the land is. And the price you paid for land is $200 million. And that's why your stock trades at 200 million, because why would we pay you for gold that's in the ground when we could have bought in the land and done the same thing right next to you? Right. So the world's, for the most part, logical. But then someday they'll get a $40 billion valuation because people start believing these stories that gold in the ground is actual gold coins or something. Right. And that's when moronity takes over. And that's what's going on in cryptocurrency. There's no logic to any of it. None of the currencies are backed by anything. None of them do anything. None of them carry information. And if they do, it's not scalable. So it's not going to work. And so we have a puffed up bullshit market worth more trillions of dollars than there is fiat, right? There's probably only like 25 trillion in all fiat or somewhere around there, plus or minus, 10 or 15 trillion. But like, that's actually kind of a limited upside. If you look at the history of Bitcoin, like, Bitcoin's gone up so many thousands of %, but from here, we're talking a couple of, or a few 100% upside. So you're talking like a 4 to 1 odds, 5 to 1 odds.
You're not, so you're going directly against what Michael Saylor, I don't know if this is a new presentation, but he just said, remember the number 21, because in 21 years, Bitcoin's going to be worth 21 million and it's going to be growing at an annual rate of 21%. That is certain. He said it. Michael Saylor said it. So there's no question. There's no more thinking involved at this point. So how can you say something that goes against directly Michael Saylor himself, which is quite frankly, just as important as Satoshi Nakamoto in this day and age?
It's really simple. That old expression you'd use as a kid, like if I gave you all the money in the world, like if you take, let's say all the money in the world is 25 trillion. So the United States dollar is like 6 trillion. Let's say the euro is 6 trillion. And what would the other big one be? China. Let's say that's 6. So we got 18 trillion just from China, all of Europe and all of basically North America. Add up all the little countries in the rest of the world and double it. Maybe that's 12 trillion. So let's say there's $30 trillion of money in the world. If you take 30 trillion and start trying to buy things like from your neighbor's house and car and all the goods inside of his house, and then you start like going in a spiral circle of buying everything that can be bought around your neighborhood, you probably wouldn't even make it out of your state in your own country before you ran out of $30 trillion, right? That's how much wealth is in the world, right? In houses and maybe even gold in the ground potential and farming goods and skyscrapers and all this stuff. the money in the world needed to support all that wealth is not even 1%. So multiply 25 trillion times 100. What do we get to? 2.5 quadrillion. It's probably somewhere plus or minus a full order of magnitude close to maybe all the wealth in the world. But you don't need that in money. If you had all that in money, then you'd have a depression, right? So the amount of money you need to support all the wealth in the world is actually very small. So everything Saylor says is based on stuff like, well, if it was equal to gold, but gold has a use, right? Like gold gets turned into circuits in nuclear bombs. Gold is the best conductor that we have of all the metals. Gold is a perfect, it repels all bacteria and molds and everything. If it was cheap, everybody would paint their basement in gold. It would never be moldy, right? So it's just an idiotic statement to think that first of all, we need all the money that we have currently. We don't even need the 6 trillion in the United States. We could probably do with 100 billion. It'll be plenty of US dollars. Sure, a cup of coffee would go back to being 5 cents or whatever it was in 1969. But like, all the extra money does is create inflation, and we don't need it. But, nothing is based on a penny anymore. You don't get anything for a penny. So what the hell's the use of it anymore? We might as well just lop it off. So we don't need all the money we think we need. So 2.1 quadrillion Satoshis is an insane amount of money. Even if you take the decimal place over to, that's 21 trillion. That's plenty for the whole world money supply till the end of time. It's probably 10 times more than we need, which is good because we're going to need a lot of it for information too, which can all be put on one Satoshi if we need to. Bitcoin network's plenty big in terms of number of slots and pennies or Satoshis. And so all the Saylor stuff is complete nonsense. We just don't need it. In fact, the more not paper money, but the more monetary money we have, that's actually a sign of bad economics, right? We want as little money as possible and as much wealth as possible. That's a good economy. I mean, what does your money do, right? If you have $1 million in Satoshis in your wallet, what economics is it providing? It's providing nothing. You have $1 million in your bank account. Okay, maybe you're getting a few percent because it's getting relent out. Not anymore these days, but it's not really doing much. The value of the money is in the house, in the car, in the things that actually can generate cash flows. Your car can make Uber travel and make money per ride. Your house can be rented out. These are economic things that we need and generate actual more wealth. But the money itself, it's right from the Bible, right? Like the Old Testament, the 3 servants. The 2 guys invest their money and the one guy buries it. Well, who gets yelled at in the end? The guy who buried it, because it's not doing anything. You're just wasting everybody's time and money. Like it's meant to be invested. And you hear Greg talk about this all the time, and it sounds awful because 99 out of 100 people in BSV just want the price to go up so they get rich. But like, so he's frustrating them because he's saying, no, the value is in the system and the ledger and what it can do. They can generate money for you. You can create a business and it can generate money over and over and over again, rather than just sitting there and hoping that the price goes higher because somebody else is doing something, right? So I just think we've reached the peak of the speculation and there's not much more room for it to go up. So it's got to go down because it doesn't have any value. It doesn't have any real value, which is sad because what are we, 15 years into this? And I can honestly say that the thing that I built with Bitcoin is one of the few things that I actually use. Like I use a little bit, the sports book site and prediction market. That's cool, I think. Good use of Bitcoin. Orange Gateway isn't really an end use. It's a place to get Bitcoin and trade it for fiat and back and forth. I think that's a great company and product and business, but it's not really an end product for consumers. It's more of like an infrastructure project. So what are the other infrastructure? I mean, what's your favorite Bitcoin app? What's your favorite cryptocurrency app? Like what cryptocurrency do you really need to do anything? Yeah,
none of them, like even, I've gone through kind of the crypto graveyard. I've gone through all the announced projects and stuff like that. And there's nothing that's actually like succeeded. There's just skeletons and ones yet to fail, really.
Well, I think some have succeeded. They've just succeeded with a limited number of customers that pay attention. So there's more dead apps in BSV that I actually still value and wish were around today than there are currently running ones. Like I really like Streamanity in all of its form, both before Lujek got it and after. We need one of those. And it was technically going to grow if someone, kept it going. But they weren't willing to because, they're like a gnat. They had to have money immediately, probably because all his friends were making money and owning Solana and Ethereum or whatever, and he got jealous and now he runs a Ethereum Saylor business or something. Like he's got to get the money fast. But like if he was just patient, Streamanity would work. I made it work. I had a podcast on there. It was exclusive to Streamanity. It was doing much better than if we had used YouTube monetarily. We're making money. Another one was Baymail. Like I don't know what the status of that is these days. I haven't even loaded the site in a while, but like it was a great start. It was a great start to email. Use Bitcoin with no spam, and you knew everybody on there was going to be saying important stuff because of the way it was formatted. We need that. We need a more modern version, faster and more complete. And someone should put capital into that. Just ordinary chat. The social websites. We had Palping. We had Twitch. We had Lament is still around, but there's like 5 or 6 or 7 of those. I was on almost all of them, and in one way, shape, or form, they were all valuable because I earned a lot more money on those than I ever did on Twitter. I haven't earned any money on Twitter, right? So even something as simple as there was a URL shortener built by Gal Buki called Simri, and it just didn't have ads. And so you would pay a penny for the URL, and you'd think, well, what psychopath would pay a penny for a URL? And there's like 40 URL shorteners on the internet. They're all free. But like when you put the URL shortening website onto your browser, it's hard to even find where to put the URL to shorten it. Like, because there's so many ads and shit coming at you that it just crowds your brain. And by the way, if you get caught by one ad, like one of those, hey, who's your favorite soccer player? The top 100. And you're like, I wonder if it's mine. I wonder if my guy is the number one. And like, you could spend 30 minutes on that when you were trying to shorten a URL. Like, shortening a URL takes like 3 seconds. And next thing you know, you've blown through a half an hour and you're like, I wonder why I didn't get my work done today. Oh, I got clickbaited into, soccer shit when I was at work. Well, how much is that worth? Like, you're not going to pay a penny to shorten a URL every time you have to shorten your URL, which takes 1 second with no ads, or you're going to endure the ads and every once in a while waste an hour of your life on clickbait. Me, I'm paying a penny every time, even if it costs me $3 a year, right? Because $3 a year isn't even 15 minutes of work for a person cooking fries at McDonald's.
There's quite a, I guess now as well, it's, as we're moving into the MetaNet paradigm, and the MetaNet wallet and the website can make the request to the wallet, and, you grant access. Like, I agree, like all those things are fantastic little proof of concepts, and I use them and they're fun, and like you think that that everyone would use them, but they just sort of haven't, because the friction's kind of been a bit high, or the interoperability's been lacking. So when they do run dry, they can't port it to a new system. So, but in broadly in crypto, there's nothing that you can really point to that's a success, at least at an enterprise scale. They've all fallen over. Nothing's working there, and it's the prototypes and the pilots and the little funky fun dynamic that someone had an experiment with that have shown the possibilities and have shown utility of the system, and down to fractions of a cent.
You know who the angriest guy in the world's got to be, or the most disappointed? The founder of Friendster. You know what Friendster is?
Nah.
Friendster
is the before Facebook, right? That's like a before MySpace even, right?
Yeah. It's like the first like social network where the guy kind of thought to himself, like, wouldn't it be cool if we were all on like a social network and had a page? Yeah. We could all relate to each other. Like, that dude sort of gave up at some point. Like, it's not going to work out. Like, what is Facebook though? It's in the top 10 size companies in the world. Dude's like, as rich as you could possibly be, and never has a free second to his life. Like, all the dreams fulfilled, right? But one guy, Friendster, had the idea probably 5 years before that dude, maybe even 10, and like didn't work out. Not because like it wasn't the right idea. It's because he got in early and thought it was all going to work in like 2 years. It didn't. He had to like attack it all the time. Like, if he could have just told someone like, hey, this business is gonna be worth 2 trillion in about 20 years. Maybe you should just keep financing my company, Mr. Investor, and I'll just keep working really hard. And even though there's nobody on my site yet, or just a little bit of people, kind of like, I don't know, Streamadity in 2020 or Palping, like the first year he put it out, there was activity on there. Like, I was making money, like writing articles on there. I still have some articles on there that I need to extract. Thank God for the Wayback Machine, I can find them. But like, these things start off small, and you have to be comfortable with being small, and you have to endure all the pain of nobody adopting it for a while. And that's what it's required. Otherwise, you're just the next Friendster. Now, maybe it's not going to be BSV. Maybe some new coin comes over and takes over the world and is scalable and all that stuff, and it'll all work out. It just won't be BSV. That can happen too. All I'm saying is you kind of have to not give up. And that's where, like I was telling you guys earlier, you have to make this decision. Are you going to go full time? Like, do you have such a strong vision that you're Friendster guy, and you're like, no, I not only need to accelerate while I have like 7 users, but I need to go as fast as I can, because better, smarter people from better universities with better cachet and Harvard connections are coming, and I need to be bigger than them, such that they don't even try to get into my market, right? Or should I just part-time it, and like things are slow now and I can do other things, and but I'll just keep this ball rolling a little bit? That's a decision too. It depends on whether the adoption is going to come in 2 months or 20 years, right? I mean, that's kind of what you have to decide, but and that's why capital comes into play. So to kind of go back to one of the topics is price important? Well, it is kind of important, because the price of the commodity in any commodity sector, whether it be oil, milk, or Bitcoin, it tells investors how much capital they can invest and expect a return. So like, you're not going to invest $10 million into like a Bitcoin YouTube startup tomorrow, because users
like is it like Streamadity? Nobody's going to invest $10 million into Streamadity.
Well, someone did invest a decent amount in Streamadity initially. I think it was probably like $1 million at least. But
that's
my point is just that, like, you got to invest commensurate with where the market is. And so, yeah, you could invest $1 billion into BSV kind of products and things. But is the demand there yet? Not quite. So you'd be a little early, and your capital is going to, be stifled a little bit. But like, if the price were to go up, then some companies would be self-financed, right? Like, like Satoshi himself, right? Like, here's a guy who was running businesses in 2013, and was applying to repatriate his Bitcoin from another country so that he could continue his research. And things didn't work out. But that was mainly because the government didn't really understand Bitcoin and didn't give him permission to repatriate the money. But had they done that, we'd probably still have several companies building Bitcoin banks in Australia right now. But that's my point. Like, the price going up in 2013 and 14 financed a lot of financial activity in the startup world for Bitcoin. And in BTC and Ethereum and all these other guys and the other 22 million coins, every time their price goes up, people do get the chance to build stuff if they want to. I mean, it's probably not going to scale like CryptoKitties or whatever, but like when the price goes up, money's just around, right? In oil, right? Every capital spending boom in oil where rigs went up and refineries were built for the Rockefellers and all these people, it didn't go up because the price of oil was down. Let's put it that way. The price of oil goes up, everybody starts making money, right? And when you start making money, you reinvest profits back into building bigger, faster, smarter, right? So the industry builds as the price goes up. Another way I like to view this is, like, people think speculation is bad. And I was one of those people for a long time. I thought, speculators, they're just the dummies of the investing world, right? Like, they serve no purpose. But they do serve a purpose, because if you think about science, right? My favorite human being probably from history is Thomas Edison. And one thing Edison did was he said that basically, I can solve problems by trial and error. So he looked for a filament that would last the longest in a light bulb. That was his biggest problem at one point. The light bulbs they lasted like an hour, and nobody's going to change a light bulb every hour in your house, right? You knew you had to get it to a certain point. And he understood the system worked, but he needed to find a carbonized filament that would last longer. And so he didn't have a scientific method for it. He just trial and errored it, right? So we tried all these different plants. He built a retirement home in Florida so we could find more flora to carbonize and find out which plants make the best carbon and all this other stuff just to make a light bulb last longer, right? But the trick is, here's one of the smartest human beings in the history of the world, and he resorted to trial and error like a dope, right? But here's the thing about trial and error that people don't understand is it's actually messy and inefficient, but it makes up for it in speed, right? So trial and error, you don't have to think of methods to try. You're not wasting your time thinking of an algorithm. You just like, let me try this, that. Let me try everything that is around me. And you hope that after you try a million things, one of them will work, right? So what you lose in efficiency, you gain in speed, because any dummy can do trial and error. Well, it's the same thing in markets, right? How do we know which .com is going to be the one that's going to turn into Google? Well, you just spray the money around, right? Yeah, you're going to get money. You're going to get money. You're going to get money. We're going to send money to all you people and hope that 1 in 100 of you are actually going to do something good with it. We know that like maybe 20 of you will just be outright frauds. You talk a good game and you sold us on your widget, and it turned out you were a complete fraud. And that's a waste of money. And you could have spent more time figuring out the history of that person and how logical is their solution and all that stuff. And you could have done that and saved your money. But because you sprayed it around to 100 quickly, you actually got the 2 that would work, and they went up 1,000,000 times. So even the frauds you don't care about anymore, because the frauds were just the cost of finding the right people quickly, right? So that's a way to go. And that's what speculation is. Speculation is we don't know much. We don't even know if you're a good person. We're just going to hand you money and hope that you're a good person. And out of 10 of you, 2 of you will be horrible people. 8 of you will be decent people, and 1 of you will be an amazing person. And out of 100, we'll have 10 amazing persons. And out of those 10, 2 of you will succeed beyond all of our wildest expectations. And that's speculation, right? So it turns out the market is really efficient and really smart. It even knows when to speculate. And when does it speculate? When it hears an amazing idea. So like the internet is a freaking amazing idea. And everybody started to understand that as early as 1998, right? So that's why the .com boom happened. It wasn't because people were dumb. It was because people didn't have enough information to be discerning, but they knew the overall idea was a good one. The internet's going to work. It's just a question of who and what. It's the same thing with Bitcoin. It's like, we need the speculation. We need the money to be thrown around. We need crazy billionaires to be like, here's your money, and here's your money, and here's your money. And that's how shit gets done fast. And we're seeing it in crypto. We're just not seeing it in the crypto that works. And so we saw some. I mean, we did have some investors. I'm one of them. But those investors didn't do well, right? So like, there's something wrong. And how do you return speculation? I don't know that that's an easy question to answer. But one thing I can tell you for sure is that if the price of your commodity that's related to that speculation, that causes that speculation to happen in the oil business and in the milk business and in the Bitcoin business, if that price is suppressed, then so is your capital and your ability to speculate. And therefore, the industry does not develop. It's starved. And this is what Bitcoin's enemies are doing, and they're doing it very well. They've succeeded in making everybody think all the wrong stuff is right and the one right thing is wrong, and starve that right thing of capital. And that needs to change. There are things we can do, right? So beyond being a He-Man and just building the most perfect product from scratch, like Beard Papa, just doing it all in a garage somewhere on $0 of capital. Yeah, that'll work after 100 years, maybe, right? I mean, we need 1,000 Beard Papas and Jack Pittses and Todds and Anils to like build stuff for like 2 or 10 of them to work. And it all has to be done in a garage with 0 capital and over 20 years. That's how long it's going to take to refine the product to get it right. that's just, I mean, that's a waste of time. You'd rather just have the speculative way of doing things because it would get done faster. It would seem efficient because it'd be a lot of waste, but it would get done quickly. And quick is good in business and economics. So, and it's good for people and populations, right? Like these technologies we get are helpful. So I just think if there's one thing we can do that would be positive is to stop thinking that there's something wrong with the BSV price going up. And also we need to start thinking about who and how people are suppressing it. And they are. It's a manipulated coin. The price is suppressed almost every day. There are rare exceptions where it goes up because there's a lot of buyers in a short period of time, like when there's a catalyst or an event, like a trial or something. But aside from those short periods, that's why they end and go back down, because there's someone who has a lot more money than we do, $100 billion sitting in an account that runs exchanges and runs, what's it called? Coinmarketcap.com, where their business would be heavily affected if Bitcoin worked. MasterCard included, like MasterCard, Binance, Huobi, all these exchanges, they would all go away if Bitcoin succeeded. So, and they have tons of capital. For them to spend a couple $1 million suppressing the price is totally worth it.
So what, like, with that last event, I went on a little bit of a forensic, with that last, big liquidation, I went on a little bit of a forensic inquiry just to see what went on and thinking, because BSV on KuCoin, I think, crashed down to $11. On Orange Gateway, it went to like 19. On a few others, it was around 19. What is it, $22 now or something? But I thought, okay, so what's happening on the volume on KuCoin was like super low. But on some of the other exchanges, we just looked before on IndoX. So I was looking at what's the history of IndoX, and apparently it was, basically shut up shop last year after failing to meet a whole bunch of like regulatory obligations. Yet the volume of on IndoX for BSV across a Litecoin pair, a USDT pair, BCH and BTC pair is over $100 million. And then all the next exchanges are like low single digit millions, and then even then Orange Gateway and, I get, if I get BTC and BSV, it'll be on BTC markets in Australia, a couple $100,000 volume. So it seems like the ones where there's no shenanigans are doing, maybe a few hundred thousand or $1 million. And then one that's shut up, that when you look in social media, it says people can't withdraw their coins from IndoX. It has like a 1-star review, and it's doing $100 million of volume, which spiked during that forced liquidation, as did Gate.io's volume. It had a really high volume there. So, what's the mechanism there? Are they naked short? If you can't withdraw it, they're doing a kind of an arbitrage then, because they can sell the price down. Algorithms are attached to that around automatic market makers or trading bots and such. What would be your hypothesis there?
It's really simple. IndoX would be like, if I was talented enough to make a full exchange facade and just throw numbers up, I can do whatever the hell I want. Like, who's going to check me? Who's going to check IndoX? Nobody knows where they are. Nobody knows who the founder is. It's just a made up exchange. Like, I'm not saying it's completely fake in terms of you couldn't trade on it or something. I'm just saying like 99.99% of it is just there to achieve a goal of manipulating prices around, so that when something like CoinMarketCap aggregates the price from IndoX and HTX and BitsPay and KuCoin and MEXC, Buybox and Changely and Mandel Exchange, and they weight it all, like the IndoX number's going to be relevant, right? Because it's got $88 million of trading in a day, supposedly. But who's going to verify that it really had $88 million in trading? I can trade my Bitcoin back and forth without moving it on an account-based custodial exchange forever. I can post $1 billion of trading. Look, I just did $1 billion of trading with my son today. We just constantly were arguing over the price all day long, and we traded $1 billion notional at $100,000 a coin. Who gives a shit? Like, who's gonna test that that's accurate, right? That's essentially what they're doing. They're just like, we can just make up any price we want. Now, there is opportunity for arbitrage, but that would require actual trading to be occurring, right? That would require withdrawal. Like you just said, somebody tries to withdraw on IndoX and they encounter problems. It's like, oh, give us like 3 days. Sure, I'll give you 3 days. I'll give anybody 3 days. They can go out to a real exchange where they can get actual BSV, like Orange Gateway, and they can take 3 days to buy your $1 million worth of BSV. That's why it's going to take 3 days, because they don't have it, right? There's nobody trading real BSV on IndoX.
It certainly seems that way, yeah.
There's nobody trading $100 million on IndoX. There's not anybody trading $1.2 million on MEXC. I got the whole list right here. I'm not even using the internet. I'm using a spreadsheet that I use to track this stuff. You said 100 million. That's almost exactly correct. IndoX has several different pairs. When I add them together, it's over $100 million. That's in other cryptos like BTC,
LTC, BCH.
And those have to be fake, because there's no way anybody's trading Litecoin, BTC, and Ethereum, which all have fees out the wazoo, $100 million worth. They'd be losing a couple percent a day. There's no way they're doing it.
Unless it's algorithmic bots that are doing it, that are trading it. But then why is the volume so high, the churn, unless it's that bots are actively engaged in doing something? And what are they doing? Are they trying to pump the price? Are they trying to keep the price flat? Are they trying to suppress the price? There's sort of only 3 options that would be, the desired outcome of creating $100 million of churn through those bots.
But this isn't just BSV. This is every crypto, including BTC, the big ones, the small ones, all of them. It's just a made-up fantasy world created by the exchanges that have all the control. And the exchange that really honestly has all the control is Binance. If you trade on the Gemini Brothers website up in New England, the Winkle Tossers, if you trade with them, and you want to trade $2 million of BTC, they don't even have enough internal trading to match that. So they got to find liquidity. Where are they going to find it? They're going to find it on Binance, right? Everything ends on Binance. This is the way markets work, right? Like sometimes there's a couple bourses in different cities and they all trade local stuff. But if you have an international company like the South Sea Company or IBM or something, and Microsoft, that trades all over the world, it's going to trade on one exchange. One exchange is going to gain a monopoly because they're the ones that provide the real liquidity. And it's the same in crypto. And so all the exchange activity, all the trading liquidity is going to end up on one exchange. And that's been Binance for quite a while now. It's sad to say that like these hedge funds and giant like financial management firms in the United States that have tons of money, when they do crypto, they used to do it on Genesis, which was Barry Silbert's organization, and they would get liquidity from Binance. And then post Sam Bankman-Fried in 2022, I figured, well, maybe Binance will fail as well, or at least we'll get a more honest, monopoly exchange that's maybe based in the United States and has some rules. But unfortunately, the same thing's happening. So the guys that took their place is Galaxy Digital, and I think you saw with that 80,000 BTC move in August, they traced it, went to Binance eventually. So like even today, things are finishing on Binance, and so he controls the real volumes, which I would guess are somewhere between 1% and on maybe super duper trading days, like where there's giant news up or down, maybe 10% of the volumes that are actually printed. But for the most part, I would say the volumes even on Binance are wrong by over 100 times. So whatever number they're printing and saying BTC is trading that day, I would multiply by 1% to get what it's more closely actually trading. So that means that.
But they don't list BSV either. So they're the liquidity provider or something into these algorithms, but they don't list BSV. So there's an association or an algorithm that maps the liquidity and the volume on Binance, ports it over to IndoX or something like that. Like,
well, first of all, IndoX is like a joke, right? That's like they're like a tier 5 fake organization with no details at all about the exchange. So like that's just a completely made up exchange, right? Like
France or something like that.
Yeah, it's nice actually if they manipulate prices, continue to leave it up. It's almost stupid being how blatant they're being about it, that anyone can see that IndoX is bullshit, right? If I actually wanted to be more sneaky about it, I would get rid of it. I would shut down IndoX. I'd pay the $40 it costs to acquire it and shut it down because it's so blatantly obvious that it's actually the opposite of the intention, right? It shows how easily you can manipulate things. But like BitsPay, let's get to the Tether stuff. So HTX claims $10.6 million in any $10 million a day. MEXC is like $1 million. So let's say that those are probably accurate to 1% of what. So I would say HTC probably has about $100,000 of actual trading on it in a given day, a BSV, right? They're printing 10 million. So the 99% of it is to move the price where they want it. And the 1% is the suckers that come in and get fleeced because they think there's $10 million of volume on there. So they come in there thinking they can get like, oh, I need to unload 2 million or I need to buy 2 million. And they don't realize that they're the only buyer. It's like giving all of your information away for free. It's every trader's worst nightmare, right? When you trade something, you want to be completely anonymous. You want to make sure no one sees you come and going or know what you're doing or how much you got to buy or any of that stuff. But on HTX, MEXC, Binance, you're the only thing they see. They're like, hey, check out Donnie Trump's coming in to buy $10 million worth of BTC today. What an idiot. Let's jack up the price on him, then we'll lower it back down tomorrow. I mean, this is literally what they do for a living. So like, what I would tell people to do is watch the movie The Sting. It's Robert Redford and Paul Newman, and it's a con man movie. And the final, you don't even have to watch the whole movie, but it's probably best to watch the whole movie so you'll understand the context of the end. The final scene is they get this Mark, this sucker, who's like a gangster millionaire, and they bring him into this underground New York, Chicago or something sports book, and they have him bet on the horse races, and it's all illegal and everything. And the guy gets this tip that horse number 3 is gonna like come in first or something, and he makes this $1 million bet, and he puts cash into the cage. Right. And he sits down to watch the race and his horse is doing pretty well. And he gets all excited because his horse is in like 3rd place. And he's like, see, I'm going to win. He's getting mad because his horse is in 3rd place. And he's like, no, he bets that the horse will place, which is he can either come in 1st, 2nd, or 3rd. And so he's thinking he's winning. And the guy next to him is like, I didn't tell you place. I told you win. And the guy's like, what? And he's like, no, I said the horse is going to win, not place. Like placing is not good enough. So the horse comes in 3rd and he loses all of his money. Right. Well, right when he gets pissed off and he starts doing gangster stuff and he's going to take his money back out of the cage and claim that like it was a mistake, the cops pull in and they bust the whole illegal horse book totally. There's like 100 people in there. 100 people are in this underground basement betting on horse, and the cops book them all. And then they had the shooting scene and somebody dies. And they're like, gangster guy, you got to get out of here. There's been a murder and you're going to get caught up in it. Like, just get out of here. And they escort him out. He's like, but my $1 million, I got to get my $1 million back. Like, this shysters like took it. And they're like, no, it's not worth going to jail for. Just get out of here. And so once he leaves, there's like 2 dead guys in the basement that the cops have shot up. The 2 dead guys stand up, like they're wiping blood off. And then like the whole casino, all 100 people turn around and they start clapping at the acting performance of everyone in the casino. So it turns out all 100 people that are in the room are all in on the con. They're all a giant organization who all know that this Mark is the only real person in the sports book. And that's what every crypto exchange is like. You have the crypto owner and all his like coder minions and everything, and they've got everything rigged up. Oh, look, we've got $1 billion in BTC volume today. Come on in with your, $100 million buy. We'll treat you right. We got tons of people that want to sell. And then meanwhile, there's no sellers. There's only just the exchange. And so it's you versus the exchange, and the exchange has all the information, and the sucker is the one who thinks it's all real. And so they just have their way with it, right? It's like, it's so easy, right? Because there's no rules. There's no regulatory body. None of these guys have anything to answer for. And so they just roll you, right? So it doesn't matter if you're rich or smart or anything. If you think you're going to get value by trading on HTX or OKC, thankfully, I think that one's shut down, but only because they're so greedy that they're trying to get into the United States. MEXC, all these guys, it's a complete fraud. You're going to get screwed. You are the mark and the sucker. I don't care if you're trading $1,000 worth or $1 million. So that's the shame of it. And the proof is in the pudding, right? Like Bitcoin was $1,200 in August of 2017. And it's now 2025 and it's fighting to stay above $20. So it's down 99% in what, 8 years? So anybody that's touched real Bitcoin has lost money. Now that's fine. You can say like, all right, well, you shouldn't have been holding it. That's fine. Like it seemingly doesn't matter if all you care about is building things with it and everything. But I'm telling you, the ability to build is also associated with the amount of capital and the amount of positive outcome that you can get because you expect people to be using it. And people will use coins that where the price is up just because you have extra money lying around. So it feeds in. And I think this is obvious to most people. And I think it's obvious to everyone. I think there's a group of people that are in leadership positions that they really can't talk about it and they shouldn't. And so that's expected. I wouldn't expect that to change. And I wouldn't want it to change. I think the only message that's proper in BSV and real Bitcoin is build with it, use it, be a customer, invest in companies, whatever. Those are all the right things to do and say for them. But what I would also say is if you're also you're Russia buying your bullets and bombs from Ukraine. You're Israel buying Hamas-made missiles, right? And when they blow up in the chamber on you, you shouldn't be surprised, right? Like if you're going to finance the enemy and give them money, and they have an obvious agenda, like MEXC literally cannot help themselves, but everything that happens in BSV, they have a negative comment on it. They have like a whole research department, several people, kind of like you and me that we write about BSV. They just write against BSV. Like what money can be made in that? Nothing. I mean, it's ridiculous to even do that. But they do it.
Well, the money that's made is the damage control, the suppression that allows them to keep the casino going on. So it's like it's just an overhead is keeping the suppression going or loss leading on banking that price and fighting it.
Yeah, it's called the mafia, right? In the United States, when the mafia makes more money than the policemen and congressmen are paid, then the policemen and the congressmen now work for the mafia, right? That's like small mafia, no problem. Like that can be shut down when it's small. Once the mafia is making tons of money, it's like a percentage, like 1 or 2% of their profits. They just give to cops and congressmen and they pay them off, right? Big business, pharma, whatever. You make these enormous sums of money and then they have tiny sums of money that they distribute to the campaigns, the political campaigns. So it's an easy business, right? Like that's a huge margin. If you can donate 1% of your profits to a politician and have rules change in your favor, you do it. You do it all day long. I mean, like if you have no morals and you're an evil company, but like this is what the exchanges do for a living, right? They're not going to dinners in the White House, campaign finance dinners for nothing. They're going there so that they can, eliminate their competition and boost their own quote business, which is a fake business. It's basically a money machine for them. But for everybody else, it's a loss center. It's a waste of capital.
Yeah. To what extent do you think like unallocated BSV are playing into the equation? Like, so from the fork when Coinbase never honored it and they say, oh, we liquidated it at $50 and gave you $50 worth of fiat, but do they now have a significant, like all the exchanges that never honored it, is there a significant volume that sits in a shadow pool that can be sold and rebought through these dodgy exchanges, because they need to mitigate some level of risk. If you can't withdraw it, then it does flash. They need to have some on hand that they can satisfy some customers. So do you think that the shadow ones play into that?
Yeah, I think if you think like you're CZ at Binance, right? And you're like, how do I keep my money machine going, right? Like the worst thing that can happen to me is some patent asshole comes in and patents everything and then like claims that their coin is going to work and it actually does work. And if it does, then it starts to take over. And sure, you could trade it a little bit, but honestly, if it's going to take over his money, you're not really going to need an exchange for very long. and you're certainly not going to have 2 million different coins trading against each other. So business is going to get bad. So if you have amounted, say, $50 billion in paper wealth, wouldn't you use, how much of that would you use to make sure your enemy doesn't ever rise up? Especially if you're making like 2-3 billion a year just on interest alone from your Tether holdings and U.S. Treasury interest. So you're making $2-3 billion in Tether interest, plus all the trading gains you're making from suckers that come into your casino. Everybody from Michael Saylor to Elon Musk, plus all the little suburban dads multiplied by 100 million people. That's a big business. So like, how much money would you spend? Like, just give me a number. Give me a number how much you would spend to make sure that the thing that actually works would stay down. I mean,
yeah, I got to shift my mentality. Like I got to think like a unscrupulous businessman. But like even if you just think about companies with a marketing budget, they'll spend 60 cents on a dollar to make the other 40 cents off of it. So why not spend 2 to 1 or something on shutting it down? Because not only are you going to lose your money, if you start to have a timestamp server in there with a chain of digital signatures that can't be altered, and all your financial activities tracked, and you're facilitating money laundering and human trafficking, you're not only going to lose your money, you're going to end up in a slammer. Like when they can do the forensics on you.
Now let's up the game one last bit. Let's now assume that it not only doesn't cost you money to ruin your enemy, but you can make money ruining your enemy. I call this the 9/11 attack, right? Like if you're planning 9/11 for next 9/11 and you're going to bomb, let's say, the Empire State Building this time and scare the living hell out of 350 million Americans and make them triple up on their shitty rules for airline shenanigans where everybody pats you down, all that stuff, just causing tons of chaos. What if I told you can make money doing it? Because what you do is you just short the airlines and you short some banks and some other stocks 2 months prior to the attack. And then you don't really care if you lose money for a little while, or maybe it goes up 10-20% because it's a hot month in October or whatever, or September. But then the bombs hit, the planes crash into the Empire State Building, and that maybe costs you, let's say it costs you $5 million because you're paying off all the families of the pilots and everything, right? So they crash into the building, it goes down, Americans are crying, and the president's like dancing around in rubble with an American flag, like the whole deal, 9/11 all over again. What if you made $10 billion shorting $20 billion worth of stock, right? Because it went down 20% or whatever. And now you've made billions of dollars destroying America. Incredible, right? That's why they shut the stock market down for a week. It wasn't because the stock market was having trouble operating or they were afraid the prices were going to go down. They knew the price was going to be down. They shut it down because they were looking to see if they're like, if we shut the trading down, we have time to look and we can prevent that person from covering their stock or whatever. And we can get everything ready, all of our monitors ready to see who might be trying to do that exact attack by making money, bombing America, right? And ruining America's like decade. And that's what the people against BSV are doing. So the 2021 summer attack that happened with this supposed Bitmart stealing of what I don't know if it was $1 million, it might have been $300,000. It made it seem like it was some hacker that got away with hacking $300,000 and turning it into Ethereum or whatever. First of all, they didn't even succeed. They like froze the Ethereum at Bitmart or whatever. But second of all, Bitmart is owned by Vitalik Buterin, Fenbushi Capital, Vitalik. And after that attack on BSV went from $492 in April or May of 2021 to $100. It was down $392 in a span of 2 months. Now, what market cap is BSV at $500?
What is that? 10 billion?
10 billion. And what market cap is it at $100?
2 billion.
2 billion. So if you sold a crap ton of BSV at 450 and 400 and 390 and 490, all those super high prices to all the frenzied BSV speculators that were coming in on that time period, and you're like, yep, sold, and you just keep selling. How much money could you have made if you known that BSV was going to suffer a humiliating attack on June 6th, right? If you technically could get the attack to happen to claim that BSV was double spent or whatever bullshit they claimed, and that headline hit, then you could start covering into the bad news and buying it all back. You could make several $1 billion destroying BSV's value. All you have to do is know about the attack and plan it out, just like 9/11, right? So that to me is what happened. And you know what the proof in the pudding was? It was after Bitmart embarrassed themselves because they had to basically admit we did no KYC or AML whatsoever on a bunch of New York City customers in America, which is illegal, by the way.
Be able to do, yeah.
Right. And not to mention the fact that a normal consumer, if you walked up to them and said, hey, Bitmart just got hacked. Hey, come invest in Bitmart. That's where you should trade, not Binance or all these other places or Coinbase. You should trade at Bitmart because they just got hacked last month, right? Well, that's actually what happened because Bitmart announced a money raise 2 months after the embarrassing admission that they did no KYC at all, and some hacker made out with whatever they claimed, 100,000, 300,000, 3 million. I don't know what it was, some tiny number compared to the $8 billion that BSV dropped in 2 months ahead of that attack. I'm sorry, but you don't get to raise money after that as an exchange startup. The only way that they were able to do that is if they're getting paid off. Like, thanks
Yeah.
for the rigged attack for helping us out. And now why don't you go announce your money raise and we'll just hand you $20 million. Thank you very much,
Yeah.
Bitmark.
We'll
Thanks
call
for
on you again when we need you. Yeah.
Yeah, exactly. So like
Yeah.
easily planned out if it's not going to cost you much, right? Like Vitalik's like, well, my main thing's Ethereum. I can't embarrass myself there, but I get this little Bitmart thing going on. I can, if something happens where they get a bad name and look embarrassed and it goes to zero, no big deal. But we've at least killed BSV. Oh, and by the way, we made $500 million shorting the stock, putting the at $450, and we just covered it $120. Just made a shit ton of money. So yeah, here's your little 20 million Bitmart, dirty deed. Meanwhile, you netted $480 million or maybe even $1 billion. It's just a simple 9/11 attack, right? Like,
because at that point you can still do futures on Bitfinex and such with BSV too. So you could do 10x margin or something on BSV through Bitfinex at that point, and some of the other ones. So you've got your 10 times short on there. You sold all the way up. You know, let it actually flare for a little while, and then put your shorts on and little stunt, and yeah, take that to the bank.
And now imagine that all 20 million cryptos are the same, but some of them you want to go up. So when Sam Bankman-Fried and CZ and Justin Sun were still the Beatles, they were still a functioning band of thieves, pirates, they could combine their forces of Tether and Binance and HTX, and they could make, whatever they want to happen.
Terra Luna.
For any crypto, for Solana, right?
Yeah.
Like what's so special about, did you ever read Proof of History? It's the most ridiculous white paper I've ever read.
Yeah,
it's just basically, it's basically proof of stake repackaged as some fake proof of history bullshit where they parse out, they like hand out the duties, the consensus duties, which makes no sense anyway. So the whole thing was just pumped up. Avalanche pumped up. Ripple is very well maintained and carefully sold off so that the Ripple Labs can maintain a ginormous budget. But they own most of the coins and they just sell them off as time goes along. That one's manipulated. Cardano, same thing. They're all just run by a different version of the same criminal. It's the sting all over again. Each one of them has their own underground casino, and they're all just fleecing whoever comes in the door.
Yeah, and sometimes like my mate, they had a coin, a utility coin for a project back in 2018, and they couldn't get listed. They couldn't even get a press release out. I think it cost 30 grand for a press release. It was going to cost 30 grand or 100 grand to get on Coin Market Cap. But then Bitcoin comes along, and you have a free go because there's these consortiums of whales that sit there and plan these operations and say, let's get this one. We'll in a couple of weeks we'll produce a signal. We'll send it out through X, through Telegram, and people will think they're early getting it because there's a rumor of a listing, so they buy it on some crappy thing. And then it moves on to Coinbase, and the pump goes off, and they're just selling it all into the pump. And I've talked to a friend who's in these kind of groups because he's got some significant money, and he's happy that he's made it in there because now he's got access to that and he can suck on the teat. But there's multiple ones of those of guys that got into Ethereum fractions of a cent, the ICO, got into Bitcoin back then, got into Solana at fractions of a cent, and they decided this is going to be the vehicle, and we milk this one, because Hedera or Solana, they're funded by big money that created the Solana Foundation or the Hedera Foundation. So they got these budgets that they can spend on marketing. They got budgets that they can hire people and make it all seem legitimate. And the $10 million or the $100 million that they're funding the foundation with is just loss leading to run sell off this asset as they go forward.
Everything that has to do with Ripple, like you said, cost tiddlywinks to market and make it sound like a big deal. They can literally pay off the biggest banks of like $10 million. I've seen all this movie before. This is what .com did, right? They would make press releases like, Purchase Pro just signed IBM as a customer. But the actual contract says, well, IBM gets to own 5% of Purchase Pro and start selling the stock as soon as it goes up on the IBM announcement, right? So these are like actual contracts that were written. So the whole thing is, some of it's done, quote, legally, even though it's really just a Ponzi scheme. And so you got like the president of the United States in there. Now, maybe technically somehow he's not like violating any actual laws. I'm sure he's like attempting not to. But at the end of the day, and I'm not like anti-Trump or whatever on a political base. I'm just saying when it comes to crypto, the guy's just your average common grifter, right?
The fox is in the hen house there, isn't it? Like,
yeah, but I mean, it wasn't any different with the Biden administration. At least with the Trump administration, it's so obvious. You can just literally, he tells you what he's doing. Like, hey, I'm going to release Melania coin. Like it's pretty easy to see the grift from a mile away. But like the Biden administration, I'm sure they were getting several hundred, if not an entire $1 billion from the Sam Bankman-Frieds and all the rest of the shenanigans.
Well, that all did go into the Democratic Party, and there was money going all into these, pretty shifty.
So I'm not picking on the your favorite political party. I'm just saying when it comes to crypto,
cool.
They're all in it for the money, right? That's all the grift. They could care less about anything. They're just like, Malay coin, Trump coin, Melania coin, Joe Biden coin, whatever they need to do to sell it. And the thing is, like, you don't even need a customer, right? Like, the nations themselves are printing money, so they can print money and buy it, right? So it's like, it's a perfect system because you don't even really need to sell to too many people. And then you got a private Fed. It's now as big as I think we're into the 90s now with how much stablecoin is out there. So like if you look at Tether, I have another spreadsheet where I combine Tether with all the stablecoins, and when you add them all up, they've printed the same amount of money as the United States dollar was in circulation in the 90s, the early 90s. That's a lot of money. And it's a private Fed. There's like 4 guys in the Tether organization, like 4 that actually matter. I'm sure they have a couple of secretaries and stuff, some pilots that fly them around. But I'm saying like the CFO, Stuart Hogener, the council, the CEO, maybe that weird Brock Pierce guy is still in there. I don't even know. He could be the secret owner for all I know. I mean, that's the kind of shit. Like, you don't even know who owns this stuff. Like, on paper, it's Paolo Andrino owns it, but like, you don't know. I mean, there could be a secret deal with Brock Pierce owns the whole thing for all we know. They just need to make sure.
He got the idea came out after he went to Epstein's Island in 2012 for the Mindshift conference. So Tether came out after on the back of that.
Oh my God.
You know, he's got his past from Hollywood and, you know, the Digital Entertainment Network or something, and he you know, young Hollywood star. There's some shifty stuff that's happened there. So who knows what kind of fingerprints are on that?
Look, all I know is you got to head towards the light, and that means, you know, instead of focusing on stuff that you're not ever going to make money on. I mean, look, you can make money in the next week, month, year, whatever on some crypto, but like, are you really going to make it? Because you got to decide when to get out, because eventually this shit's going to go into zero. It's not worth anything. And so like every buddy of yours, it's like, oh, I made this much money. Okay, but are you out? Are you in fiat now? Because
yeah,
you just get back in,
right? Yeah.
Oh, I made $1 million in Ethereum. Now I'm investing in Fartcoin, and I got like some of that. I got some Shiba Inu, and it's like, yeah, they still have the million, but it's in like 10 shit coins. So in other words, you're only going to make the money if you get out at the top or somewhere above where you bought. But they all stay in. The guys who have made the most money on the way up are the ones that lose all the money on the way down, and then probably even what they started with. So it's like, it's not as easy as it sounds. Like, you got to get out. I mean, how do you know when to get out? Nobody knows. I don't even know. And I've been doing this for, you know, I've done stuff like this for my whole life since I was 11 years old. And you can write entire encyclopedias on how to get out of something with a profit. It's just, the easiest thing. So anyway, I just think the only message I have for people is build, invest in companies that are building something, use the products. They're not perfect products. None of them are, but they're pretty good. Like, they're exciting. Like, I think Little Bit and Art Gateway and Slictionary and stuff that Beard Papa is building is cool. And it's going to be a little buggy. What's that? Tree Chat? I would just say use it for what it's worth, right? I mean, like right now, maybe you write an article on Tree Chat or something, and only people on Tree Chat are going to read it. So maybe you're not going to make a lot of money. But it's more money than you're going to make on Medium, unless you're like a writer of some sort. So everything has its base, and you can't just assume that you're going to make $1 zillion writing articles on a BSV network when there's only like 1,000 people out there to consume it. But if you don't make the content, nobody's going to come back, and it's not going to build, right? So you got to start small, and you got to be content with the market you have. And then as far as the speculative stuff goes, I would just say, no matter if you're trading $1,000 and trying to get some Bitcoin to use or to invest in or whatever, or if you're trading around $1 million or $10 million, be careful who you deal with, because they have your information. They see you coming from a mile away, and you're just that mark in the underground casino where all 100 people know that their job is to fleece you. And I'm specifically talking to guys like Saylor, Elon Musk, people in the BSV community that have money to blow. I'm just saying, it sounds really easy to try and trade this stuff. And who knows, maybe you can make a little bit of short-term money, but in the end, they're going to get you, because the biggest guy wins. In a fraud contest, the biggest guy wins. Read Killing Pablo, right? It's not the good-natured cocaine cartel that wins in the end. It's the most violent one. The guy's willing to commit the most atrocious, worst, shameless stuff is the one who rises to the top. That's, in our world, that's Binance and Justin Sun and Tether. These guys, they just don't give a shit, right? If they gave a shit, they would have quit while they're ahead, much smaller. So these are guys, they're just going to keep going for it until someone either puts in jail or they build statues and they run entire nations. I don't know about you, but I don't want to live in a nation run by some of these cats that are in crypto. That'd be my last choice.
Yeah, absolutely. Cool. Well, we've definitely covered some stuff there. Sorry, Neil, go ahead.
Oh, I was just curious, like, just you know, how you wrapped it up. I think from your point of view, you know, if the markets are rigged, the exchanges are rigged, and most likely, you know, the BSV price is going to continue to go down. Where do you see, like, what would you, like, for me personally, I'm okay with the prices being really low right now, because like long term, like hope. Actually, here's a question for you, because like there's been sort of some controversy as to, you know, whether people or not people, but BSV should try to get delisted from all exchanges, so that like price manipulation doesn't happen. Whereas more people, I should say some people, I think it's a common misconception to think that you want to get listed on more exchanges. It's the common like shitcoiner mentality that you want to get listed on more exchanges and on bigger exchanges so that the price can pump, right? So, you know, what's your perspective on that, and about getting delisted versus getting listed on more exchanges?
Great question. How many exchanges does Tesla trade on?
I don't know, half a dozen or something, is it?
Realistically, only one. It trades on the NASDAQ. It's got a 4-letter ticker symbol, which is a NASDAQ ticker symbol. It trades on the NASDAQ. If you're German or Japanese or whatever, maybe you're trading a derivative of the NASDAQ traded Tesla stock. So like when I buy Ryanair Airlines, it's probably one of my favorite companies ever, run by a complete lunatic named Michael O'Leary, whose conference calls you should listen to like it's a TV episode. But like if you own Ryanair and you buy it in America, you buy this weird ticker symbol called RYAAY. And what it does is it buys 10 shares of, I think the ticker symbol is like RYA in Ireland or something. So the real Ryanair only trades on one exchange. Now you can buy it on the NASDAQ, but it's really a derivative. So that then buys it from the real exchange. And that's kind of how all stocks work. Like you only need to be on one exchange, right? Like when Tall used to trade on the Canadian exchange, it was their wet dream to trade on the NASDAQ or the NYSE, right? If they could have done that, they would have given up all the other exchanges. Because it's the only ones that matter, right? They're the legit exchanges where you can get real liquidity and real investors. And it's international. So Binance is that for most cryptocurrencies, it's the be all end all like main liquidity provider in crypto. So that's the exchange you'd want to be on if you're a fraudy shitcoin, because that's where you get the most action. But if you're BSV, you want to be on an honest exchange. And if that's just one, that's fine. That's all you need. But what you want is a fair price. You want a market-based supply and demand created price discovery. What you don't want is manipulation, because again, that's Russia buying their bombs from Ukraine, right? It doesn't make any sense. So to the people who say like no exchanges, I would say, well, that's a little extreme. Like, sure, I guess that would work. It would be really clunky, and people like businesses that would build themselves that need to get like my business would, if BSV started taking off, my business would go up commensurate with the amount of wallets are out there and always has. I would need to obtain Bitcoin, and I wouldn't want to have to get it from like some sidewalk vendor, or like, or I wouldn't want to have to buy it from a miner or whatever. I'd want an exchange where I can get things done efficiently. So what you want is fair exchanges that have rules, like protocols that are built for fairness of the market. What you don't want is to trade on an exchange that's there, like UTXOs or whatever, to commit fraud, because you're just shooting yourself in the foot. So I would say, that's why I say like Orange X is a great thing, because it's probably the exchange that I always wanted. Mainly all it does is trade BSV against different pairs, which is exactly what I would want. And if you talk to Hlinner, he's a good guy. Like he thinks like most people that are interested in the utility of Bitcoin, that's where I would want to trade. He's got the best, most honest fee system. He's doing everything as right as can be done on the minimal amount of capital that he's using to create the exchange. And the exchange works. And if you can't get the liquidity you need on Orange Gateway, which I have ranked as probably the second biggest real BSV exchange in the world, and not behind the number one by very much, maybe 10, 20% in volume. I don't even know if Paybito, I've never even heard of anybody mentioning them, but they're the only one. They trade against the euro, not much money per day. And Orange Gateway is about where they are. So that means Orange Gateway is already the biggest real BSV exchange in the world. In terms
just out of curiosity, what is, yeah. So do you know what the trading volume is on either of those two that you just mentioned, just out of curiosity?
Well, you can look up one of them yourself. Orange Gateway, I'm not at liberty to say what the volume is because it was a private discussion. And I don't know if he wants to keep that private or not, but I'm blabbing on a podcast. But you can ask him personally if you want or whatever. But I'm just saying that to say that if someone were to say, well, it shouldn't trade there either, just have it off all the exchanges, I'd say, well, that's a little extreme. What you want is regulated, not even really regulated by government, but just regulated by common sense. Like exchanges need rules. If you want to have a fair exchange, I'm sorry. I realize that there's a large contingency of free market capitalist libertarians that think that anything you can do that isn't violently killing someone should be okay, and that's a nice thought. But if you believe that fraud is wrong and manipulating stock prices does damage, as I do, then you need rules at your exchange. You need a exchange that's managed by, for instance, companies that use the commodity. Right? That's how the history of all commodity exchanges is based on committees that run them, where the committee's formed by the companies that use the commodity. So, like Tyson. If there was a chicken commodity, there isn't, but I mean, if there was, you'd expect Tyson to be on the board, right? Because they'd be like, well, we don't want fake chicken prices because it would ruin our business. We need real chicken prices. So if we have to institute a few trading rules on you crazy derivative traders and New Yorkers and Chicagoans that are just all you do is trade the commodity, then we have to tone you down because this is a real business, right? We sell milk, orange juice and chicken, and sugar and all this stuff, and it affects real people. We can't be fucking around with price manipulation. People's entire businesses rely on this. There's debts to be paid and real shit that has to happen to serve customers. And if some trader is going to make money by fluctuating the price all over hell, and that causes disruption in the real industry, that has real consequences, right? Like people go bankrupt on that, like real manufacturers and stuff. It's going to be the same in Bitcoin. If you think that price manipulation is acceptable right now, you're like, whatever. So it's manipulated a little bit. Sometimes it's going to manipulate it up. All manipulation causes damage to the people who are really using the commodity. And disruption, and it leads to errors and lots of problems. I assure you, I've read the history. I mention milk all the time because literally the farmers were dumping their milk into the fields. That just shouldn't ever happen, ever. in a normal market. No matter how bad the market is, the milk can always be sold at some price. It shouldn't be dumped. But when you have derivative traders pushing it to obscene levels, then anything can happen. And it's the same in crypto. So like, as far as I'm concerned, I just don't know if real businesses can do BSV until we control the price of the commodity. Not so much control it, but make it so that it's fair. So it's based on real market action. And that includes speculation. But speculation.
Whose responsibility is that? Who's like, is it the BSVA that should be pushing to, we shouldn't be listed on IndoX, and we should make declarations that we've said delist us off IndoX, and they're saying no, and we're saying, this is sus. This one's sus. Prove to it, show us, that you're not sus, or delist us, and you're doing neither. So we're assuming you're sus. Like, there should be
delivered a whole plan to the BSVA, whatever you want to call it, that organization. And actually, they accepted it. The guys lower down with sound minds said, yeah, that looks like a good plan. It was basically a good housekeeping seal type of plan, where you pat the good exchanges on the back and you help them, and you don't help the bad exchanges, right? You can't like force them to stop trading BSV, but you can make it very uncomfortable for them, right? Just like the good housekeeping seal or industry associations, the oil producers of America or whatever. Like, you can have organizations put pressure on people who are not abiding by honest rules, right? You can at least know what the rules are, right? Like, there's a great website that I use to find the good milk companies in my local area. It was called like cornucopia.com or something. And all they would really honestly do is send surveys around to all the different milk producers and say, how do you do this? How do you do that? Do you clean up your crap? Do you sterilize? Do you not sterilize? Like, what do you use for homogenization? Or is your, all these questions about their business, and they can choose not to answer, but like, then they're given a grade. So it's like, if you don't answer the questions, you get a shitty grade. And then that association makes it their business to publicize those scores, right? And that's a way you can help. Like, it's just information and education. But like, if you put enough pressure on some of these organizations and you say like, oh, who's your CEO and where are you located? And like, they're not going to hang out too long. And by the way, like, some of these exchanges, I think they eventually scrapped the plan, thinking like, oh, when we institute like Terranode, these crap exchanges will find it hard to keep up because they'll probably want to run like a full node. And all the wallets are currently having a problem, like Centby and all that. And sure, that could be a legitimate way to stop it, and that should be used too. But like, honestly, it's not enough, because that's assuming that these exchanges are operating fairly or in any manner, but they're not. So like, IndoX doesn't give a shit whether they have a BSV server. They don't even let you withdraw the coins, right? Unless you change it out into Tether or something, which means they don't even really have Bitcoin. Robinhood's in the United States, and they did it in 2019. You could technically buy BSV on Robinhood, but you couldn't withdraw it for 2 years, right? And they're not selling you. And by the way, their marketing, their trading provider was Citadel. Citadel's not buying BSV for you. Are you kidding me? They're just saying, yeah, you own BSV now. If it goes up, we'll make you good in the end, but if it goes down, you're going to lose. They weren't really buying and getting you BSV because you couldn't withdraw. There was no sense in that. They were just showing you a price and saying, this is what it's doing today. And then meanwhile, it's getting manipulated. So they know it's going down. So every person that buys it, they're like, dumbass, you're eventually going to sell and we're going to make the money. So, or Citadel's going to make the money, whatever. But the funny thing is, when they eventually started allowing withdrawals for other cryptos, they made the mistake of including BSV. So everybody that was buying BSV ended up withdrawing or starting to withdraw, and they found it annoying. So they just delisted BSV like within months of them saying, yeah, you can finally withdraw your BSV. Everybody started withdrawing BSV, and they're like, well, this doesn't work for us. You're not keeping it on our exchange, so this doesn't help us. So they delisted it.
Yeah, we have to find it from somewhere else. It's like starting to cost us money to like actually get the coins,
Yeah. OKX left the building only because they wanted to operate in the US. Well, doesn't that tell you everything about what OKX was doing? Because the whole point of being in the US is that we don't put up with a bunch of bullshit. We've already gone through all the frauds in the past 100 years. We've solved most of them. So we don't allow things like naked shorting. We don't allow like certain ways of manipulating price. We have rules in our exchanges. Otherwise, bad things have happened. And we've learned this over time. And that's why the exchanges have rules. And by the way, the NASDAQ and the NYSE aren't going to sit by and abide by all these rules and then let Binance and OKX and that piece of shit FTX that Sam Bankman-Fried brought into the United States. They're not going to let those guys go in and do whatever the fuck they want, like they've been doing in international waters on the US soil, while they don't make the money in crypto. Are you kidding me? You think like JP Morgan and the New York Stock Exchange, which are both private companies now, don't want to make that money and battle Sam Bankman-Fried for supremacy and BTC and Ethereum and all that other dog shit? Of course they want that money. So they're not going to fight on unequal terms. So either one thing or another has to happen, right? Either the NYSE and NASDAQ have to go rogue and adopt all the shitty zero rule systems of the international exchanges that can only exist in the United Arab Emirates and Latvia and Estonia and all these weird countries that don't give a shit. So either all the like real exchanges move down and we have total chaos, or the shitty exchanges, when they come to America, have to up their game and start abiding by real rules. Well, so far, now don't quote me on this, because with the current administration, who knows what's going to happen? They might just be like, yeah, NYSE, do whatever the fuck you want now, and just start robbing everyone, right? That could happen. But so far, the trend has been, if you're coming to the United States, here's the new set of rules you need to operate on, and none of this shit fake volumes. We're going to audit your volumes. We're going to make sure that you're not naked shorting everyone. If you provide a commodity, it means you actually need to allow withdrawals, all this shit. And what do? When they come to America, they delist BSV. It's the first thing they do. OKX. They made sure they delisted BSV on a schedule right before they started to try and penetrate the American market, because they got to prepare. They can't do that fraudy shit anymore, right? So they got to erase that whole ledger of fake trading and all the bullshit they're doing at BSV. Got to clean it up. They don't do that. They don't delist BTC or Ethereum or any of these other ones, right? Because they're happy just doing the trading with those. But like BSV, they're like, oh, the whole thing's been a fraud, so we need to get rid of it. Just erase it. Just get rid of it. That way we can move it quickly. So that tells you everything right there. Like same thing happened with Bittrex, right? Like they traded BSV for a while on American soil. And as soon as they were kicked off American soil, they wiped it. They didn't trade it internationally on an international exchange. They just wiped it because they knew they couldn't compete with the fraudy exchanges. Bittrex wasn't stupid. They're like, we know that Bitfinex and Mexi and Huobi and OKX, we know these guys are connected and they all control BSV. So for us to trade BSV internationally is a complete waste of time for them because they know they're like the 8th best guy and they're not rigged to commit all the fraud that the other guys are doing in international waters. So they shut it down as soon as they moved out of the US. Same thing, but in reverse. So it's just interesting. You can read, you aren't able to see the exact methods in which they conduct the fraud, but you can see the warning signs and the decisions they make. Like, oh, as soon as they're allowed to withdraw BSV, we have to delist it. Oh, as soon as we're moving into the United States, we have to delist it. Oh, as soon as we're moving out of the United States, we have to delist it. These are the warning signs of blatant fraud. You don't need to see the cards. They're telling you by their poker read what they're doing. It's very simple. So yeah, there are things that can be done and they're not being done. And it's very frustrating. I've all but given up. I don't think anybody is going to listen to me anyway, but like, I don't see anybody else that understands how the markets work. Not in BSV anyway. Most people are just like, oh, the price went down today because somebody said something wrong. No, the price went down today because it goes down every day unless there's a frenzy of buying. And it pushes up for a little while. And then once the frenzy ends, the machines take over and just pump down, pump down, pump down. They have to do it in an orderly fashion to make it real. But honestly, and I don't know how far they'll push it. Maybe $20 is the limit. I don't know. If you push it down too far, it's too far, right? Like actually there's a price that's so low that certain pro BSV people could end up taking over the whole damn thing, like of the real supply.
Yeah.
And that's the problem.
The $5 prophecy's fulfilled, and just everyone backs their truck up, and Satoshi's got 10,000 BSV, and Mort's got 10,000 BSV or something like that, and they're simply not enough liquid BSV to do that. So that'd be chaotic.
Well, here's the funny thing. If let's say Calvin at BSV equal to $1 is like, fuck it, I'll just buy every single BSV that's available for sale and can be withdrawn from another wallet. So he's like, I'll buy it all at $1. Just send it all to me. He's like, 20 million. I spent that like last year just in BSV startups. So this will be easy. I'm just going to take over I'm just going to corner the market. Now you would think BSV would go up if he does that, right? Let's say he owns 90% of BSV and the other 10% is owned by the 1,000 people that the rest of us. Now all the BSV is owned by long-term holders who all think it's going to 100,000 or whatever. It's going to flipping. Yeah, that's what we all think, right? It still doesn't mean BSV is going up the price, because naked shorting is like an infinite supply of extra BSV that they just on paper say, oh, that price is still down, and they could just spend the money. It's only now BSV is only 20 million market cap at $1, and they have 40 billion in the bank in Tether. So it's like they could just trade it ad infinitum, including all the arbitrages that would be done on Orange, Gateway, and anywhere else where Calvin could find liquidity, and they could still keep the price down. But the problem would be if someone large were to corner the market, and then they can prove that, in other words, the more BSV you own, the easier it is to prove that those exchanges are full of shit, right? So everybody's looking for the silver bullet, and it's like, well, Jack can't provide it because he doesn't know exactly what's going on behind the doors of IndoX, and I don't. I have a pretty good vision of what it is based on what they're projecting, but I can't say for sure. But when you can say for sure is if you owned 90% of the volume of the trading outstanding BSV, and and then you like start taking tallies from other people. Jack, how much you own? Stu, how much you own? And you just combine all. You're like, huh. I know people that own about 98% of the volume, and you're saying it's 100 million in volume today? I didn't trade. Did you trade? I didn't trade. Did you trade? I didn't trade. So how the hell did they trade 100 million in volume? Because there's only like 3 people unaccounted for that own 0.1% of BSV, which at $1 would be like $20,000 worth. So you're saying that the people that own $20,000 of BSV traded it amongst each other all day long, and there's still $100 million of volume on IndoX? That's when things start to really happen. That's when you can call up your local politician and be like, we have all the facts now. Like we have the silver bullet. There is all these volumes are fake. We need to go after these exchanges. They're probably money laundering for God knows what purposes. And then it becomes real, right? But I don't even think it has to get to $1 or $5. I think at a certain point, I think we're already there practically. I mean, you hear them mentioning it. Guys like Calvin and Craig are saying stuff like, you hear Craig say it all the time. He's like, something like 500% of all the BSV in the world traded, today that are available.
Yeah.
They're counting. They're doing the silver bullet work where they can literally see the fraud, and so they know
Yeah,
more
you're
than
doing
I do.
masters in statistics and econometrics and whatever quantitative analysis to put it all together. But yeah, it's still I guess
It's not even higher level math. It's simple math. It's
No.
like, hey, I own almost all the shares. How are you claiming that this volume's trading? That doesn't make any logical sense. And so that's a way to go about it as well. I'm just saying, I don't know. I think a commodity needs a committee of people who are stakeholders, whose businesses and lives depend on that commodity. And BSV doesn't have it. Like, I'm too small. You combine me, Orange Gateway a little bit, Beard Papa, and the 7 or 8 other people that are still actually running a BSV business. We just don't have the volume or the business size to really speak up. If we were bigger, we would form our own BSV association that would be a different one, and we would take action. Believe me, we don't have the money, time, or capital because we're too small. And that's the problem. So anybody who does have the time, capital, or money needs to step up. Otherwise, this thing's just going to die on the vine. I hate to say it, Terranode or no Terranode, people will just keep ignoring it. I don't remember any time in BSV's history where we said it didn't scale. So do you think all of a sudden, because we have a better node software, and I think we do, but do you think just because we have better node software, that everybody's gonna be like, oh my God, now you really scale? Okay, with Terranode, now I have to press the I believe button. I've been saying fuck you, you're a fraud for the last 8 years, but now with Terranode, I'm finally gonna believe you can scale. I don't think so. Maybe, but like, there's a lot of shit smeared on BSV and the people in BSV, and I don't think that ends just because of Terranode. I'm sorry, but like, I don't mean to be a skeptic, but like,
no, Terranode's
I want to.
A lot of people were waiting for Terranode, thinking that when it's released, the date releases, that there's going to be something happen. I'm like, you won't even notice. The real interesting thing would be like BRC 100, when people start building some apps and you go, oh well, I can like slot my, grab my data from there, move it over here, and it was seamless. And that's where I think we're going to see some, there is momentum there. There's a hackathon going on in Asia at the moment around that stack. A couple of hackathons that Ty's put on, and when a few people are able to produce something, and when we can bring over a developer from Solana or Ethereum and say, hey, check out really clear documentation, follow it, and all of a sudden the thing that they were trying to build before is working, that would be way more likely to see a fuel on the fire rather than Terranode. Terranode can then support it, but it's not a magic switch for anything.
Agreed.
In my opinion.
Look, all I'm saying is show me the customers and show me the transactions. That's all I care about. I don't care if it's Terranode or the previous reference implementation. I don't give a shit what it is. Just show me some customers and some transactions. That's all I really care about. And once I think we start seeing stuff like that, then I think the capital will roll in, and then I think things accelerate. But so far I'm not seeing it. I'm not seeing anybody saying. I haven't seen one company make an announcement, or enterprise or government going, "Hey, when Terranode is finally fully tested and released and on the whole BSV network running smoothly, we're shifting all of our pharmaceutical shit over to BSV." Like, there hasn't been one announcement. So like, I don't know. That movie Jerry Maguire. The guy just goes, "Show me the money, Jerry. Show me the money." I want to see one thing happening that's exciting, and otherwise I'm just in my garage tinkering like everybody else, and hopefully the tinkering will work in 10 years from now or 100 years from now. But it'd sure be nice to see like this Bitcoin thing happen in my lifetime rather than in my grandchildren's lifetime.
Yeah, some wind in the sails.
Exactly, a tailwind. I'd like to see real Bitcoin get its first tailwind, and if that is via any method of all the above, I don't care. I don't care if it's speculative on the commodity itself. I don't care if it's a killer app that's not mine. That's fine. If it's Satoshi writes something on a billboard and everybody believes it, whatever. I don't really care. It could be, as long as it's not fraudulent, I'm fine with it. Just give me some kind of pulse. Besides, hey, we built some infrastructure and it seems to work better. Okay, but like, if nobody's using it, it just doesn't.
So let me ask you, like, in closing thoughts, how do you, given that there is manipulation and maybe the price stops at 20, maybe it goes to 15 or 5 or whatever. So like, it's pretty certain it's not a good time to think about buying and holding and hoping for the best, despite this beautiful chart, this like descending triangle, whatever technical analysis people like to post on X, saying that this is about to explode based on the technical analysis of the chart. So despite all of that, what do you think is like the way forward? Like, if you say that, like, the price of manipulation, the price of paper is just going to continue going down, but what if writing contracts and I don't know, like writing songs and like selling those songs is valuable enough that the usage of the paper can create wealth and create economy? Like, what would be your closing thoughts around like the direction to move forward? And I'm trying to like end this on a more positive note going forward. But in my mind, I'm just thinking, like, it sounds like we can't really be take the Michael Saylor approach to BSV, which I think a lot of people in BSV kind of are sort of banking on, to be honest, right? And it seems like we kind of have to build some stuff and like build a circular economy in a way. And so like, what do you kind of, if you could I don't know, say something to the potential builders that are in other ecosystems that may want to build something and build a real business, like what would that message be to people in this ecosystem and potentially to newcomers that are considering on building something themselves?
My message is really simple to everyone, and it's more customer focused rather than build or hodl or anything. It's what's your favorite BSV app? What's your favorite app that utilizes BSV you find interesting and enough where you'll be an early adopter and just use it, not because it's necessarily superior to the legacy products that are out there, but because it has more promise and you can see that as it grows, it would be way better than the legacy product. I know for a fact that my product is not perfect. There's a lot of stuff that needs to be done, and most of it's going to require capital and time. But I already know for a fact that a dictionary / encyclopedia that's built in the way that I've formulated it is way better than every other product in the world that does that same business. I know for a fact because I've literally diagrammed all the stuff that you can use Bitcoin to do to make a dictionary better. And it's almost an endless list. Like it's hundreds of things, but there's some of them just obvious. And there's no way that it's not better. If you build it, it will work. But like, what is your favorite business that's already using it? Because if you don't have one, then you're really not what I would call a BSVer, if that's a word. It is a word in the dictionary. But I mean, like, to be a BSVer is not to be a person that owns it and hopes that it goes up. It's not to be a person that even builds with it. It uses it like a customer. What the internet was built on, right? Like, I didn't like enter the internet going, hey, what stocks can I own and get rich? I didn't enter it to build anything on the internet. I entered it because I was like, man, eBay can do auctions like without Sotheby's and all these like highbrow humans from London, no problem, on tiny little items that Sotheby's would never care about, like, you know, your sneakers from 1975 or your old, you know, Matchbox cars or whatever, your Pokemon cards. Like Sotheby's isn't going to handle a sale at $15, but eBay is, right? I was like, man, what an amazing app. I'm so excited for the internet. Not because I want to own the stock, not because I give a shit about the, you know, IP protocols or the tech or the infrastructure or anything, just because I can see that as imperfect as eBay was in 1999, it was still really promising and like you could see the future with it. Same thing with Google search. Same thing with like Yahoo Finance and Yahoo Sports. Same thing with Expedia Travel. Like, wow, I don't need to call like some weird lady in my neighborhood to like book a plane for me. And then like she gets annoyed when I ask if there's a cheaper price on some other air. Like, you know what I mean? Like you just use the computer and you get the best price in the airline that you want and the slot that when you can see everything. You just do it yourself. Save yourself $75 and you get better service on top of it. Like that's the kind of stuff. It's just so obvious. So like, you know, when PowPing came out and I could write a whole article and charge people to see it at 10 cents. And you can make, you know, somebody tips you $10 or whatever, like you make $20 by writing an article. You're not even a professional writer. That's an incredible experience. Like that's all you need. You just need to be a user. You just need, I don't care if you're building the coolest thing on BSV. What other app are you using? Like, are you literally just doing it to build or do you really believe in it? Because if you really believe in it, then even with the limited amount of apps we have now, there's something that you should enjoy going to. Like, you know, I enjoyed going to PowPing. I enjoyed going to Twitch. They're gone now, but I enjoyed going. I enjoyed making videos and having them be exclusive on Streamanity. We were the #2 podcast on Streamanity. We were making a couple $1,000s in like a span of months. If you tried to do that on YouTube, we calculated it would take you 2 to 4 years of concentrated effort to get the same amount of revenues out of YouTube that we got in 3 months on Streamanity. And Streamanity failed, but it wouldn't have failed if they just kept it going and done certain things to build it up. You know, Medium, where you can sell your article. I mean, there's been 2 or 3 or 4 of those on BSV, and all of them have gone away. But if they had just like made the site incrementally better with time, as it, I think it would still be, you know, growing. And if they formulated it right, they could get it where it doesn't cost anything to run it. And, you know, Slictionary is probably the hardest business to do on BSV. Like, there's a chicken and egg problem because we don't have all the words. And I'm not just going to plug in shitty definitions to make it work. So we're kind of doing it from a very grassroots way, and that's hard. It's harder to do it the right way than it is to kind of cheat and get things done faster and but more of a contraption. But like some of the businesses don't have the chicken and egg problem. Like, you know, video and articles and things that you can pay pennies to see. You just have to build it the right way so that it doesn't cost more than you take in, even for the tiny little BSV audience that we have. It can be done. It just requires a lot of time, and you're not going to get any capital. So like, sure, if you want to be a builder, it's a really hard route because you have to do it out of love for the game, and you have to really fight hard. And I admire anybody that's done it or is still doing it. But I would say the more important thing is if you don't have a favorite BSV app at the moment, then why are you even here? Like just go away. We'd be better off with 8 people who are like, man, I love being on what's that site you mentioned?
Tree Chat.
Tree Chat, yeah. That'd have been like the 12th one that I tried. So I've almost given up on the social stuff, like, because I just figured it's going to go away and I don't want to invest the time. But like, that's probably the one that will actually work when I finally give up. But like, you know, I'm on a BSV app every single day making transactions. That's just me, and it's not going to you know, help the miners. But I'm more proud of that than I am owning a percentage of, you know, certain BSV businesses or owning the BSV itself or even building Slictionary. I just like it. When I use those apps, I get excited. I get excited for the future, and I'm happy to be on there when they're small. And if that's not you, then again, I just don't know why why you even care about cryptocurrency in general, much less BSV. Like if you're not in it to use the apps, you're not a real user. You're just excited about number go up or something. I don't know.
Yeah.
It's not to say you can't like the number go up. That's fine.
I love number go up.
Yeah, but like if you're not using an app, you don't like what Bitcoin does, right? So that's what I would just say to anyone. Like, what's your favorite BSV app? If you don't have one, then you're not really part of it. You're nothing. You're nothing to digital assets. So,
well, you named quite a bit. It's funny because like as you were naming quite a bit of the old apps that don't exist on BSV, it really like made me realize how I guess new I really am, because I didn't hear of many of the ones that you've mentioned. And Streamanity, I'm just like, man, we should really bring that back. Like I think Todd and I should definitely do it so that we can start our podcast on Streamanity. It sounded like a lot of good ideas. Honestly, I'd love to have a website that literally just lists out all of the. There's another one actually. That I know of that doesn't exist, but it sounds like it's like right up my alley because of my work history being a media buyer, which was a thing called Tonic Pow. It was like basically sort of like a referral, campaign, influencer campaign type of thing. And I'm just like, cool. Yeah. And I'm just like, man, I would love to see that come back. And I don't know. I feel like, if we can get a list of all of these different things that were there, and then like find investors, to people that want to invest in BSV. I've already heard of some whispers of people reaching out to me. I have one in particular of a guy that knows a guy that wants to invest in BSV companies because of what they heard about Terranode. So like there are some investors out there that are like interested. So I feel like it'd be something worth doing, getting all these good ideas that existed in BSV and getting a list of those together and like curating that list and finding the money that wants to invest, and then finding the builders and like just building that community and that network of people, investors, builders, entrepreneurs, and making something happen out of it.
Yeah, I mean, if you have a person like that, that's great news. And now you just need a person who loves BSV apps, like the vision of BSV apps to build, to be building. And it takes a unique person. If you could code like Siggy and have the vision of a true BSV app loving user at the same time, that's exactly what you need. But not everybody can code like Siggy, and not everybody who can code has a great vision for why BSV is a great thing. So it's a weird combination that we need. And then the last ingredient is you gotta have stick-to-itiveness. Like you gotta be a lifer. You know what I mean? Like you can't just be like, oh well, it didn't work out in a year or 2 months or 2 years. You gotta be like, how do I batten down the hatches, make this thing run on pennies, and just run it in my spare time, mothball, whatever you got to do to survive. I mean, the key to any startup is survival. People can tell you all kinds of different stuff, but Friendster is the model. Friendster is the only thing they failed at was survival. They just need to keep at it, and that's tough to do because rejection is not a fun drug to be on. That's all that there is in BSV the last 6 or 7 years. So like, yeah, you got to have thick skin. You got to know how to code and do everything yourself. Make your own wallet. Like, part of Slictionary's mistake is we standardized on Money Button. They went away. Then we wasted a ton of months and capital on going to a hand cash, and that has worked out a little bit. But like, we need an internal wallet to do the stuff we really want to do, and so we should have built that.
Go around MetaNet client. It's cool. Like I'm making transactions all the time with it and I'm doing stuff, but it's trying to piece the other bits and pieces together. That's I'm still learning, but it works well, and it's a super nice way that it you can define the baskets, the role permissions. You can run two sides of an equation with the one wallet, so you can specify protocol IDs for the provider and one for the customer, and get turn taking from different sides of the local host thing, and get a permission dialog for the provider, and then get permission dialog for the consumer using the one wallet, because you can separate internally with these protocol IDs and baskets. So I think it's what everyone should really be moving towards. At least if they're not going to use the MetaNet client, build around that BRC100 spec, because it's super handy to be able to, I'm trying to do multi-sig transactions, and how do you pass the multi-sig to the next party to be able to sign it, and then if you want to increment it and do something in a payment channel, so that you can internalize the object, and it now is a transaction that you've internalized, and you've got keys that can sign it, and having to come up with all that from scratch is a bit of a brain bender.
It all is, man. Like, the simplest idea on paper is a bowl full of problems to solve that is seemingly never ending. And, it's a tough thing, but, I'm
a lifer.
No capital, it's a lot of weekends and a lot of nights, and, it's tough. Life is tough already. And then if you can't full time it, it's even tougher. So I admire the hell out of anybody that's doing it. If you're doing it, that's fantastic.
Yeah, that's all I can think about.
Agreed. Yeah, it's definitely a passionate topic. It's just a matter of survival. It's all about survival.
Yeah, exactly. Yeah. Cool. Well, I think we've been at it for hours now, so I covered tons of stuff. Thanks very much for your time and your generous, wisdom, intelligence on the matter, your perspectives. Much appreciated. Thanks, Anil, for writing it out with us. And yeah, we gave you a little breadcrumb the other day. I'm not sure when that's going to drop, but in 2 days' time, we've got the one and only Craig Wright coming on our show. So super excited to find out what he's been up to with some of his AI shenanigans, Anchor Chain, some of the papers he's produced recently, because I don't think they got enough attention for what they're actually suggesting is available with, sidestepping the cap theorem with formal proofs for SPV, Bayesian truth determination on AI models, and yeah, I'm very keen to hear about that. So I hope you guys have enjoyed the show, and we look forward to you all joining us for the next one. And Jack, anytime you want to come back, and it seems like you still got more to say, just give us a tap on the shoulder, and we'll love to have you back on.
Absolutely. Make sure you ask Craig if he's putting any of that farm stuff on the blockchain.
Oh yeah, I think there's something going on there. He's got some kind of control system that I'm very curious to hear what it is.
Who knows?
Yeah.
All right, guys. I appreciate it. It's been fun.